If you're in a newsroom or a trading room alike, it's been euphoric, and this morning, I guess we were hoping for calm yesterday, but I think the excitement was okay since we had no calm. But this morning, I do think there'll be some calm returning back to the street.
As it should. I mean, we've had a very volatile last few days. It's interesting. I mean, just look at across the board, the congratulatory messages that have come in. BlackRock saying that we are not concerned about the Indian bond markets. Never mind what people think about populism. So the cues are
the commentary changes so swiftly, right? I don't know whether you remember all those brokerage reports on Tuesday.
Yeah.
Everybody.
But there was a big event yesterday,
But there was a reason, right?
No, they should have never put that brokerage reports out anyway if they don't stand anymore on a Thursday morning.
But there was uncertainty. To be fair, there was uncertainty which ended yesterday with that one picture. I don't know if you can pull it up. I had asked for it. The picture after the NDA meet yesterday, and remember that the first congratulatory message from Joe Biden came soon after that's the one. So you had the victory signs being flashed by all the NDA partners right after. Please see the placement of Chandrababu Naidu and Nitish Kumar right next to Prime Minister Modi. They came out and reaffirmed their participation in the NDA. They've chosen PM Modi as the leader of the NDA alliance. So that all is well mood will definitely be a balm to the nerves of the street. Now, whether the street reacts positively, whether there's more steam or there's a bit of a breather. Remember, we've had record trades yesterday on the NSE. It's a world record, the number of trades we've had. But that's the picture which has changed, after which all the messages starting from Joe Biden onwards flowed in. The other part, I think, which will also calm nerves definitely, is that the India Alliance meet, which also took place last evening, at the end of it, had a soundbite from Mallikarjun Kharge, the Congress president, who came and gave a very clear indication that they are not looking at trying to form a government right now. Remember, that's the number one fear. Will they try and pull in a Chandrababu Naidu or a Nitish Kumar and then stake a claim? His statement says that we will decide what to do at an appropriate time, but for now we're going to continue our fight against, the policies which we were against. So they're going to play the role of the opposition. So those two very, very big factors could really calm the street today more than anything else.
This is the best form of outcome a trader or an investor would have anyway expected at this stage. But I do think, and I think Niraj may have better perspective on this, but some part of this might have already been priced in yesterday's movement on the markets. I mean, we saw the Nifty recover 50% of its losses. Banks were up and about, and I think sectorally as well, all sectors have gone up with 4% gains. The WIX declined, which should have declined on Tuesday. Of course, delayed by a day, but a big drop in option premiums, a big drop on the WIX. I think all of that is indicating to a little bit of stability, at least this morning.
Most certainly, Samina. And normally we don't do this, but a small pat on the back of our editorial team at 11 a.m. or 10:30, 11 a.m. when the Chandrababu Naidu conference was there. And we sent the links live to a lot of people as well. And everybody on the messages said, this was really needed. Thank you so much. And we beamed it out live on television to all our viewers, translated it and laid it out that TDP is indeed supporting.
And that's when the market hit a record high.
Yes, that's when the market started moving.
That changed the whole.
So I think at that stage, even Bank Nifty was way below 48,000. Forget 48,000, I think we closed about 49,000 with the last 10-15 minutes of trade yesterday itself. But globally as well, I think all is well.
Exactly.
And all is well that ends well, so we're all good this morning. Back to basics.
So back to basics, the global cues are actually pretty good. You've had a record close on the S&P 500. The Dow left out because, the broader, that sort of out of IT, it's not such a great story, but it's all about IT, it's all about NVIDIA. The NASDAQ up nearly 2%. And NVIDIA has crossed Apple in value, $3 trillion. So that's really the sea of green you're seeing on global markets. So it's very, very cheery there. The cues are looking good. And it's not just about NVIDIA, AI, and IT stocks. One set of data which came in, labor data, has also been very positive. So it's a private agency called ADP, which puts out payroll data before the official data comes out on Friday, which shows that jobs have slowed to 152,000 for the month versus expectations of 175,000. So both together is definitely a positive. You saw it play out in the bond yields as well. The 10-year Treasury is below 4.3, so it's at 4.28% on all of those positive cues. So that's a great setup as from the Indian perspective. Crude, remember, had already slipped nearly 3% because OPEC Plus and its production cuts are going to ease from October. So there was some recovery there, but the Brent is still at about 87 levels. So on the dollar, $87 per barrel. Asia itself is also having a pretty good start. There's a hope that ECB will cut rates this week. That will be watched out for. We have our own big event on Friday. Tomorrow, the monetary policy will be unveiled, and the expectation is that you will not have a rate cut right now. But definitely, the cues are positive. The implied open in the red is in the green now, 32 points up. It was the red just before we started the show, but 32 points up. So I think you're looking at a pretty positive start. I don't know if there is a lot more to come in to make up, because you made up pretty much half the losses of Tuesday on Wednesday. You had FIIs selling as well. I'll just pull up that one figure before I hand it over to Niraj. So FIIs have continued to sell. DIIs have come in and bought yesterday at 4,500 crores. FII is still selling at 5,600 crores. So they have not sort of turned the tide. You might see a delayed reaction there. But I think the mood is clearly positive right now.
Yeah. I mean, Morgan Stanley's given a target of 82,000 on the Sensex, which is a 14% upside. So there is some constructive optimism out there, but back to basics trade is very, very likely, with the bias tilted slightly towards the upside is how the trade setup looks like. And frankly, on some of the more active names, there's a bit of an indecision, and the reason we bring this out, so therefore, and which is why PSU selectively may sit on the sidelines, especially the ones which have policy concerns, and just look at what happened in trade yesterday. It's a classic example of why there is a bit of an indecision, because there's no company specific news that came in. But the top 4 losers on the BSE 500 were Bharat Dynamics, GRSC, Cochin Shipyard, and Titagarh Rail. These are the top 4 losers on the NSE 500, by the way. And juxtapose this with what happened to some of the stocks which had the best intraday recovery. So if Titagarh was down 6.5%, Jupiter Wagons moved up from 450 to 542. GRSC and Cochin were down. Mazagon Dock was up 4%. HUDCO was up 1.4%. The Adani Group stocks did really well. Adani Ports perked up about 8%. Prestige Estates from real estate perked up 8%. So there's a bit of an indecision about what could happen to some of the policy-linked sectors. I don't think there's a clear direction as yet. But the bias, as Tamanna and Samina stated, but tilted towards the upside. The sector in focus, though, and we'll do an extensive conversation at 8:15, 8:20 on that, is oil and gas on regulatory and pricing moves. So that remains certainly a pocket that you got to keep an eye out for. I mean, oil, aside of the fact that oil prices have naturally drifted lower, Saudi Arabia has lowered the price of oil being sold to Asia or exported to Asia by about $2.50 per barrel versus expectation of 40 cents. So, which is also a big cut and a great positive, if you will.
Yeah, it's a good setup for the new government that comes in.
Exactly.
Great monsoons, as in monsoons on track, which is always a big, boost. The RBI's largest, that big kitty is also there. And you have now even crude being fairly benign.
Yes.
Well, yeah, but this market was not for the faint-hearted.
Let's
not take that away. It's been a very tough last week. Yes, it all looks good this morning, and we are very excited about that. You know, you need some amount of stability returning and volatility also seeing a cutback. But in terms of a few other points that we mentioned, remember today also marks the Nifty expiry. And if you look at week on week, so from last Wednesday to this Wednesday, we are back to levels of what we had on Friday. So while you saw those very big swings, the levels are actually a reflection that the Nifty week on week has remained flat. So whatever was seen, done, absorbed and digested by the markets was actually the Nifty staying at 22,620. Well, also what you want to remember is that while brokerages, and we talked about this, while BlackRock, of course, is constructive on the debt market in India, there were lots of cautious brokerage notes coming out between Tuesday and Wednesday. What you want to remember is that most of them, while cautious, so that, for example, Bernstein actually said that the worst case scenario on the index they see is 23,500. 6,500 by year end. So despite everything that you've seen, we are still not at those levels even at this stage, which is clearly on the upside. What you want to remember is that while today marks the first weekly expiry of an action-packed June series that kicked off, apart from political developments that Tamanna mentioned, you will also be awaiting the RBI's Monetary Policy Committee meeting. No rate cut expectation is there. Whether or not they revise their GDP outlook and inflation outlook is what the street will critically be watching out for the fourth quarter. There really seems to be that's the biggest trigger. FIs, though interesting, I don't think we talked about this, but they've still remained net sellers while we saw record inflows coming in.
I mentioned the number, but so far they're still on the sidelines.
So topping up the 12,000 that they sold, they've sold another 5,600 odd yesterday. But DIIs, guys, any retail investor who would have thought would be, so I guess this course for the faint-hearted as well, has come on and aggressively upped their SIPs, and I think that's what we should be taking heart in, right?
You know, yesterday, I think Alex was telling this to me, and there were a couple of PE firms. So you remember Matt Orton saying that he was talking to HDFC, AMC, and they said that they got the largest inflow. Alex was saying 4 other mutual fund houses told him that they got the single largest inflows in a single day on Tuesday. There was one of the guests who comes on the channel told me that they got the largest ever inflow in their history in their PMS and AIF on Tuesday, and they deployed all of the money.
So
on
Niraj,
Tuesday.
while I know I've talked about this in the past, there were investors sitting on cash. There was dry powder. There was 20-30% cash calls taken on portfolios. Because honestly, if you didn't have that money to come into,
where would you get it from?
Where would you get it from? A salaried employee can't suddenly pull out cash and say, I'm going to go out and buy, right?
Agreed. They were sitting on cash, but also it tells me that in the middle of uncertainty, look at the faith of the Indian investor. In the India story.
And so it's not all about politics. While it is about policy, the fact remains that we are on a very strong structural bull run. And all those cash calls did play out quite well for investors and traders as well. Of course, funds can't take cash calls, so there's no surprise that they were fully invested. But remember, retail investors made best use of this black swan sort of event that took place over the last few days. But like we said, GIFT Nifty, Implied Nifty, all looking like we're setting ourselves for another positive start this morning. Remember, you've also got the ECB meeting that Tamanna mentioned. This is the first time ECB is going to be cutting rates in about 2 decades where there's not been an historical catastrophic event. The last time they cut rates was in 2019 during the COVID pandemic. But before that, they've never actually moved by cutting rates to spur up growth. Now, what European stocks coming back to the foreign mean for emerging markets is a conversation that we could have later on today or next week. Well, in terms of stocks that we are tracking, I know I've been complaining that there have been too many order wins, but it's back to business, like we said, and there are back to order wins for a whole bunch of companies. We'll start with RVN. I think city gas companies Niraj will highlight in a minute because that'll be a good pack to watch out for today as well. But in terms of stocks, let's quickly take you through what we have lined up for you. RVNL has emerged once again at the lowest bidder for a project, and this is a significant project, for 391 crores. Last week, they bagged an order for 38 crores, and the stock was up 5 to 6%. This time, the value of this order is 10x. So not like we can expect a 10x reaction on the counter, but a big gap up on RVNL is what I would expect if the if the PSU space is back in favor. NBCC, they've also managed to pick up a pretty big order, 491 crores. There are 13 small orders compounding to about 491 crores. BHEL, now you want to watch out for this one. They've got a 3,500 crore order from Adani Power for setting up a thermal power project in Chhattisgarh. This stock was up in trade yesterday, could expect further upside. So 3 positive stocks, guys, 3 order wins, and I'm most excited about that.
Yeah, just on RVNL, I'm very interested in seeing what happens to the entire rail pack, because we've been talking about ministry allocations to allies, and railways is definitely a prime one, which is likely to go to an ally rather than stay with the BJP. And most likely it could be the JDU, because Nitish Kumar has been rail minister. It typically goes to an alliance from the eastern part of the country.
But would that impact order wins by any?
It might impact the direction of capex that railways is taking. So, for example, then it comes with demands, okay, why not a bullet train from Patna, for example? So there are then political considerations added to where you expand and where your capital outlay comes. Not that
so
the
orders
size
will happen, but it just will be different geographies, maybe.
Yeah.
Perhaps. I mean, saying then you go into uncertain territory. So if anyone was looking at the impact of alliance on any one sector, railways would definitely be prime. On top of that is the limited point. But yes, some, back to basics. So Uno Minda is definitely one which is on my radar. The news is interesting. They've partnered with Innovance Automotive to strengthen their EV product portfolio. So the partnership is for manufacture and sale of select high voltage category electric vehicle products for passenger vehicles and commercial vehicles in India. Once again, EV is a space to watch out for the next 5 years. If you're creating a 5-year portfolio, it's something which is going to be a big, big focus of Modi 3.0. Green energy, green fuel, and definitely cleaner cars. So this electrical vehicle sort of deal is for CCUs, EV inverters, EV motors, the whole shebang. So this is definitely one which will be a positive for Uno Minda. Torrent Pharma is the other one. They've signed a non-exclusive patent pact with Takeda Pharma. They're going to commercialize a drug called Vonoprazan in India. It's to treat ulcers. The market value is about 8,000 odd crores, which has grown at 8% CAGR in the last 4 years. So Torrent Pharma has some positive news there. Fundraising is back in focus, and Kalpataru is going to consider raising funds on June 10th via NCDs on private placement basis. So Kalpataru is one to also watch out for.
Yeah, we mentioned BHEL, right?
Yes, we did.
So yeah,
3,500 crore order from Adani Power.
That's pretty interesting, the order win. Sorry, I just want to recollect. 3 stocks. So I'll avoid talking about the gas stocks because I think we'll get our colleague Mihika to talk about that. But just before that, the 3 stocks on my radar today, Indian Energy Exchange has achieved the total monthly volume of a growth which is about 29% independent of the units. The number that matters is 29%. And the monthly volume on real-time market is about 38% growth YOY. And then the smaller subsets, the growth numbers are even higher. The green market achieved growth of 74% YOY. The RECs, which is the renewable energy certificates, were up 640% YOY. But suffice to say, while the rising tide carried IEX also along with it yesterday, today could be a positive day. So watch out for IEX. Watch out for Century Textiles. Birla Estates has entered into a JV with Balmol India for a project in Gurugram. Everybody's flocking to Gurugram these days. Guys out there in Gurugram, please write to us what's happening in your area.
I hear the party scene is very good as well.
Yeah, me too. Maybe go there for the weekend really to figure that out. But look at this. Century Textiles is entering there, and the project will have a revenue potential of 5,000 crores.
But Niraj, on that one, we don't know what is your stake in this JV. So their top line, I think from what I understand, is about 4,000 odd crores. Even if they, I guess, stay at 10% off that 5,000 crores, it's significant in terms of Century.
Knowing what Century is done, but knowing what Century is done in terms of the JVs, they are at the very least 49%. In most cases, they are the higher stake.
Oh, well, then it's 2,500 crores at least that you're looking at.
At the very least. So could be interesting for Century Textiles. So watch out for that one. And last one on my list, the stock was up 20% already yesterday. Bhagiratha Chemicals. R.K. Damani's firm, Derive Trading, bought 43 lakh shares in Bhagiratha. The stock was up 20% yesterday because remember, they bought the stock. This trade happened at a lower price and then the stock hit the upper circuit in trade. So maybe the better part of the move is done, but who knows? R.K. Damani's name invokes a lot of responses. So watch out for this one. Could be interesting in the session today as well.
Also, I think stocks like Tata Motors may remain in focus. JLR sales were pretty solid for the month of May, and that would help counters like this. But just before we go into city gas distributors, I want to quickly mention bond yields. Worth the mention because you're seeing ECB cut rates later today. You've got our RPI meet lined up tomorrow. This was a volatile space last few days because you would have imagined that with everything that was taking place on the political front, debt markets and the currency markets are usually the first places where you see a reaction. Of course, BlackRock, like Niraj highlighted, still remains very constructive on the debt markets. But this is one market I would like to keep an eye out on today and tomorrow, just ahead of policy. But of course, like we promised you, we've got Nika, who's standing by. The PNGRB, which is a regulatory body for oil and gas, has announced new guidelines for gas distributors. Mika is standing by with more details on that. Mika, it seems like we've got some great news coming in for city gas distributors.
Well, there are two sides to it. Now, what the Petroleum, Natural Gas and Regulatory Board has done is they've introduced a new set of guidelines for city gas distribution companies. This is pertaining to their marketing exclusivity. Now, earlier in September 2021, a notice which declared the end of the marketing exclusivity for various companies was put forward. Now, this notice has been withdrawn and is now invalid. Now, the key change is that the board will now take into consideration each geographical area from a case-by-case basis and will look at the marketing exclusivity period based on factors like geography, population, demand, availability of gas and much more. Now, we also have Citi coming in saying that this regulatory development helps the CGDs with their ongoing litigations that they had filed against the end of marketing exclusivities declaration by the board. But it also enables the board to introduce new competition in the sector, which could also lead to consolidation according to Citi. So while it does extend the marketing exclusivity for the geographical areas of city gas distribution companies till the board decides that the new period, ending period is then, it also kind of increases the risk of the board deciding when this exclusivity period would end, and it kind of adds a little bit of uncertainty on that chapter. Also, we don't know if Mahanagar Gas's exclusivity, which in Mumbai, which ended a year ago, is now valid or invalid.
Mega, sorry. So if the move has been made for taking back the September 21 notification, why is MGL's exclusivity uncertain?
Well, there's no specific mention.
Only for MGL, is it?
Yeah, there are other, from what we know is MGL made the headlines because their exclusivity ended last year. Now, while the notice has been withdrawn, we don't know since the exclusivity has already ended, we don't know if it's now renewed or will it stay the same, and the exclusivity periods for other companies that are set to end going forward if the withdrawal is only for them. So that's some clarification that is needed because it's not mentioned in the notice.
Mika, just stay on for this conversation in case you have a point to make, because this is not the only piece on oil and gas. I mean, the Citi note also speaks about the majority and maybe getting gas under the ambit of GST and what it would mean. But Sajid looks at this space very, very closely as well. Sajid, what did you make of this piece of news from a city gas distributor perspective?
See, the thing is that when the distribution licenses were given, there were certain, numbers were given to each of them that they have to reach this kind of penetration within a certain period of time, and most of the gas distributors are behind that curve, and that's the reason why that move came in from the regulators, which made city gas distributors and as carriers, common carriers, so that it's easier to move in competition. But now what they have withdrawn it because there's a legal challenge to it, and it's so they're going to go case by case now. And in some of the cities where it's slow, really slow, there may be that entire ops can be made common carrier, and then competition can be introduced there, or it could also lead to consolidation happening, because a lot of small players have come in, but city gas distribution requires a lot of capex coming in, and if capex is not there, then the consolidation can come in there. So it opens the route for consolidation for existing players to go into.
Actually, it's not a threat in some sense, because it actually opens up opportunities.
Opportunities there. Right. So that's a big one which is there, but it's a space now open for consolidation, as well as a case by case push by the regulator saying that let's take an example of MGL, which is in Mumbai. Now Mumbai, if they are falling short of targets, the regulator can give them a target by when they have to achieve. If not, they will allow a second player to come in.
Who will come and set up the network? MGL already has a network.
So in that case, the network would be used as a common carrier, right?
As a common carrier.
So
okay, right.
let's take the example of power in the city, right? You have Adani, you have Tata Power, and you have BSES. Now, prior to Adani, there was Reliance Energy, which was there, and prior to Reliance Energy, BSES was, which was there, right? BSES already had put up a common network there. So today,
Reliance bought BSES and Adani bought Reliance. So
exactly.
It's not that they were setting up an ancillary.
But my house may be having an infra of Reliance or Adani, but I can still go and subscribe to Tata Power.
But I have to pay an extra charge. Sajid, I have to pay
Billing
an
charges
extra
you have to
charge.
pay.
I have to pay a carrier charge.
Carrier charge.
The network can be used, but the consumer pays that charge.
So that competition comes in through a common carrier.
Okay, fine.
Right? In that sense.
But, sorry.
Just one question. So I'm trying to understand if this is wholly positive for gas players, because you also now are open to competition.
Yes.
Your hegemony ends. So in that sense, isn't that a threat?
No. So earlier the marketing exclusivity was ending. Today it's getting extended. So because it's getting extended, you have still
limited
room,
competition.
Limited
but it's
competition.
coming.
But competition can come in if you don't act on the numbers or achieve the numbers which is.
So you have limited competition, but with more stringent.
Stringent norms.
But coming
in fact, there was the exclusivity period ending as per a September 21 notification, which has been pulled back.
How long
and therefore
has the
that's a
extension
positive.
been put in place for?
No, the extension is there till you. It's now.
Still
It's
as
not.
and when.
As
Extension was there,
there's
which
no
was getting
cutoffs anymore.
curtailed, which has now been pulled back as well. So therefore, that could be positive. But by the way, just and Midhani, very quickly, if you have any other thoughts on these for the CGD stocks, or else I want to move on to the next topic on oil and gas.
So when you look at, let's just take into consideration Indraprastha Gas, Mahanagar Gas and Gujarat Gas, right? In terms of CNG, that's compressed natural gas, the competition risk is fairly less. However, in the industrial segment, which is growing across, volumes are growing across the city gas distribution companies, that's where the higher risk of competition is, and that's where Gujarat Gas kind of has the disadvantage, because the percentage of industrial volumes out of its total volume mix is much higher when compared to Indraprastha Gas and Mahanagar Gas.
Got it. Fair point. Okay, guys, the other piece, a bit of hypothesis here, but just laying it out. By the way, Muralidhar Swaminathan also in the studio. Welcome, Murli. But just one more thing, and which is on the city note, right? As the city note says that with the NDA now possessing requisite majority in the GST Council and given its focus on enhancing usage of gas in the economy, it could consider bringing gas under the purview of GST. And if this were to happen, what does it do for companies like Gas Authority of India or some of the others? Any thoughts, anybody?
No, the simple thing is that they have 21 out of 31.
But they already
NDA.
had it. They already had it.
Odisha also comes into play, right? Odisha has come into play, Andhra has come into play.
Alliance
has, NDA Alliance has now 21 out of 31. So it's an easy push for them going into any GST council there. It's not that there has been a fight in the GST council, because most of the decisions were unanimous.
Except Kerala and Karnataka, which have been in any case outside this one, so that don't make a difference.
But they don't make a difference in city gas or where we are talking about GST gas coming in. But eventually, as LNG terminals come up in these states where actually it's coming up, right? So city gas would take shape in some of the cities like a Cochin or a Trivandrum.
No, he's talking about gas being under GST instead of state. My counter to that is that states are not happy letting go of more revenue sources and bringing them into GST.
But
and
if they have a majority, will they be able to pull this off?
No, but they are both chief ministers first. Both those leaders are chief ministers first. They will not want to reduce the revenues coming into state coffers versus what goes to the central government.
The principle of GST Council has been very clear that it has to be revenue neutral for every state. Simple as that, and that's how they've been working on.
Will it benefit the consumers?
It will benefit because the tax rate will come in, lower tax rate will come in, and when lower tax rates comes in, the tax, it could be passed on to the consumer and the gas rates going to come down.
Which could have an impact on inflationary.
It will bring down the contribution of natural gas today is very minimal on the inflation part of it.
Yeah.
But the bigger thing which we need to look at is that the GST rationalization, which has been pending for more than a year, the rates, that is now will be the focus.
Which is a completely separate topic again.
Yeah, but this
also could happen. But from this perspective, if indeed gas comes into the opportunity that it opens up for companies like GAIL, etc., could be tremendous.
I mean, yeah, it brings in a lot of free cash for them and to invest or to pass on to the consumer.
So interesting. Thanks, Ajit. Mihika, thank you so much for joining and giving us that perspective. This is important because oil and gas is firmly in focus today. Gas in particular, guys. And the debates continue on NDTV Profit because Murli's here. And Murli...
it's not a versus conversation.
It's not a versus conversation.
It's a bull for bull. It's a bull for bull.
In fact, Sajid would not agree with me or he
No, but let's just set the stage up. Okay.
Yeah, you said the stage.
Yeah, of course, we have an eternal bear on my left and my right. One is Niraj and one is... Tamanna, I'm going to leave you out of this. Did
you call us bears?
Sorry, bull. My bad. Bulls,
I'm right in the center.
Even on Tuesday morning when the markets were tanking, both of them were very constructive and, of course, disappointed after that fall. But Murli, of course, has stepped in to tell us by 23,000 is looking very structurally likely on the Nifty. He had, of course, said we'll do a bull and bear conversation, but I don't think anyone of us are fighting him. So unless Sajid wants to come in.
No, maybe for the day.
The question, to put this in context.
For the day, that looks like a tough one.
No, for the day it might be tough. What's stopping the Nifty from going to 23,000?
Nothing.
I can't see anything that is stopping the Nifty from going to 23,000. Till day before yesterday, you had all the doubts, political uncertainty. The market went to the other extreme. But yesterday, everything was clear. By late evening, the NDA is in place. Modi 3.0 is in place. Your economic fundamentals have not changed. The stability factor has come back, which is very clear today. Now, there might be technical factors which might prevent it, but I don't know to what extent. What we are looking at 2.5% away. And sometimes when the market runs, it runs and you cannot stop it.
Yeah, it gallops.
Yeah, my only thing is that why should we look at short term? We should look at long term.
No, long term, yeah.
And what stops the market from reaching 25,000? Let me put
Prabhupada believes that's a given by December 2024.
So what are the triggers for that?
We're not arguing that.
No, we are not looking at long term. Long term is a completely different story.
So Sajid comes in and says, let's change the game. Let's change the game. You want to play chess, I want to play Ludo. But we're still playing chess.
Sajid, long term is something we are going to tell the investors today evening at a mega event. You have all the experts, for the next 5 years.
They will tell us
I'm talking about today and tomorrow.
What will take us to 25,000?
The only fly in the
30,000 he bol do.
No, the only fly in the ointment, if at all, is I think two things. One is that there has been a huge run-up yesterday. People are going to perhaps want to wait. No doubt that the direction is positive. People are perhaps going to wait to see what the ministry allocations are. That I think would be the only sort of question mark left at all.
But that target is 24, not 23.
For 23. For 23. And then, what Tuesday has also done is given some sense of valuations, especially in pockets like PSUs, defense, etc. So maybe it will take some time to get to 23, but I agree with you in terms of global cues, in terms of political concerns lifting completely after yesterday, that victory picture that we showed. The stage is set. It may not be end of day necessarily. Leave
not
something
necessary.
for Friday.
Tamanna,
we have 2 more minutes on this.
You're forgetting one important factor in all this. It's the flows. Simple as that.
FIs have sold 5,000 again.
But domestic is...
They have oversold.
ECB is cutting rates today. So there could be some flush of liquidity coming back in. It's not, I know we always focus on what the Fed does for positive and emerging markets, but if ECB makes this move, you may just see some more free money or easy money back on the radar.
But if ECB is also looking at...
If you could explain how these shorts could be covered if there is a momentum. Niraj can technically help us.
The technical aspect, best placed person is Agam. So we'll leave it for Agam to do it on the next segment and get in a derivative expert to talk about it as well.
I spoke to Agam in the newsroom. He said, that's possible today. I mean, that's
why Murli got excited.
I got excited before.
Anything is possible.
You're getting a little carried away. 23,000 today does seem... I mean, it's also weekly expiry. And of course, Agam is staring at us. So we'll slip into a break. You can tell we're all very excited that it's back to basics, back to business. New highs, like Sajid said, 24,000 is what the conversation should be around. But we'll for now make peace and be happy with 23,000 over the next couple of days. Take a break. We'll come back. It's the first weekly expiry of a very, very exciting June series. So stay tuned.
Welcome back. This is India Market Open. We're taking stock of the futures and options space. Well, it's been an eventful day. Yesterday, we have seen a substantial amount of short covering, at least in the Nifty futures, and the Bank Nifty futures are looking at, well, fresh longs. Let's take a look at how things have panned out yesterday. Now, starting off with the Nifty, we did see a sharp up move, and as far as the underlying goes, up around 3.4%, unwinding of nearly 11%, following the very, very volatile day of trade when the outcome the elections came through. Bank Nifty, on the other hand, yesterday, and remember it was the weekly options expiry, that in fact advanced by as much as 4.5% with a 15.5% increase in open interest. And with that, we once again have the 50,000 mark in sight at the moment. Now, as far as the option market is concerned, the picture has been changing dramatically over the last 2 to 3 sessions, and perhaps on expected lines because the sharp moves on the respective indices. You know, coming down to the Nifty, naturally yesterday was a day where we saw the index advance, and which is why we saw a lot more writing in puts as against calls. But when it comes to your overall open interest distribution picture, at the moment we are still seeing a significantly higher amount in open interest as far as the 23,000 call is concerned. This is today's expiry. The question really is, can we hit the 23,000 mark today or no? It's a 2% move. It's not improbable, but well, it's a wait and watch on that one. And it's 2% after the kind of moves that we've seen over the past couple of sessions. While some traders may in fact want to bet on the fact that we can in fact move above that mark. On the other hand, there'll be plenty of others who may suggest that we've seen a significant move yesterday, and maybe it's a wait and watch on that one, but we can't rule out the expiry factor as well. So 23,000 will be a crucial factor, not necessarily saying that it is a resistance in today's day of trade, but it's something that a lot of traders will keep in mind. Moving on, let's talk about stocks. And again, it's a day where we have seen a lot of longs coming through. Metropolis, BPCL, REC, United Spirits, TVS Motor Company, all of them advancing in trade. Even in terms of stocks which saw unwinding in their respective open interest for the futures, well, they were all advancing yesterday. So, well, that would include something like a Navin Fluorine, Hindalco, City Union Bank. Hindalco, despite the fact that we had that update on Novelis where we're seeing, a little postponement, perhaps a shelving of plans for now at least, well, we did eventually land up with gains. So that's something to keep an eye on. But on that note, let's get in an expert opinion about what they make of these markets and how they're placing their bets. Well, we have Rahul Ghosh of Hedge.in who's joining us on the show. Rahul, good morning. Thank you so much for joining in. Very, very eventful past couple of days. Big, sharp moves coming in on either side, in either direction. But now that the dust seems to have settled or is still settling, what's the way forward from here?
Good morning, and thank you for having me. So last time we had discussed that the 23,000 short straddles had a lot of open positions by bigger hands. And that 23,000 mark, as you were also mentioning, seems to be an important point. And a true move on the upside can only be deciphered once that 23,000 level is conquered. So we might face some resistance around 23,000, and we might face some chopping around 23,000. That is a sideways move for some time around the 23,000 level. Also, till that level is crossed, that is till the 23,000 level is crossed and there is a firm closing above it, we are not out of the woods with respect to the knee jerk that happened on 4th of June. So that's one very important point to keep in mind. Keeping that in mind is how we've planned today's option structure, where we are expecting, where the bias is on the upside, but we are expecting some sideways move around the 23,000 level. And also we need to be very careful that if in case markets give us some surprise and it turns back down, we don't lose much money. So the current strategy that I'm proposing today has a maximum risk of 1,000 rupees on the downside to make sure that even retail is able to participate and there's not much loss if things don't go away, but has a maximum profit of about 2,500, 3,000 rupees on the upside. If you're comfortable, I'll go ahead and explain the structure.
Please go ahead, Rahul.
All right. So what we are going to do is we're going to buy the 23,000 call of end June expiry. Firstly, all the legs of today's trade are going to be end June expiry. Normally, you've seen I've used multiple expiries, but owing to the current IV spikes and down moves that is happening, it's better to play all expiries of the same 27. So we are buying the 23,000 call of the 27 June expiry. We are selling 2 lots of the 23,200 again of the 27 June expiry, and we are buying the 23,300 call again of the 27th June expiry. What this trade does is it makes you money if Nifty stays sideways or goes up. I repeat, if Nifty was to pass to 23,000 or 23,300 for that matter, this trade is going to make you money. However, if Nifty stays below 22,700 or 22,800, the maximum loss you can face is only about 1,000 rupees in the current structure.
All right. So here's how things pan out. Of course, based on Rao's strategy, if the Nifty actually does expire somewhere around 23,200, around the 27th of June, that is, towards the end. In fact, you actually do stand to make the most, and you stand to make the most in terms of your returns when it comes to this specific call butterfly that Rahul is proposing to deploy. On the other hand, as Rahul is saying, that what does happen is if the Nifty stays sideways or advances from here on, we are likely to make money eventually in this strategy. But if you do see the Nifty come off from here and perhaps trade at levels of around 22,700, 22,600 thereabout, then you don't stand to lose as much, and that perhaps is how this specific structure plays out. Now, that said, we also have a significant up move in a handful of FMCG stocks that have come through, and I believe one of these companies is on your radar today.
Yes, so Hindustan Unilever is something that has caught my eye for quite a while now. The stock has been significantly undervalued and still has a lot of potential for the upside. Having said that, I'm still being a little cautious because there was a sharp sell-off yesterday, unfortunately. So around 2,600 is where the current market price is. Above 2,650. I repeat, above 2650, we initiate a simple bull call spread where we buy the 2700 call and we sell the 2740 call. I repeat, this should be done only above 2650. The caveat of 2650 is primarily owing to the sell-off that happened towards the end yesterday and where from the highs it sharply came off. But a simple bull call spread, once again, the risk would be very low, about 7 or 8 points only. And we have the entirety of June month for this to play out.
A tremendous run for a lot of FMCG companies, in fact, even through this phase of volatility. But Rahul, on that note, taking a moment to thank you for joining us and taking us through your views on the markets and, of course, giving us and helping us with a handful of option structures as well. Well, with that, it's back to you all.
All right. Thank you for that, Agam. Now, before we get a very interesting take on the Bank Nifty, guys, I thought we should just quickly tell our viewers about our after-work plans today, where everyone is invited. So we have
but you need to register.
But you need to register, of course, for all good things. So this is NDTV Profits Invest 2029. We thought it was a good idea to get a view on what next for the market, for investors, and also an analysis of where the policy direction and the political landscape goes over the next 5 years. So we have an exciting lineup. It's at the National Stock Exchange Auditorium at BKC. All three of us will be there. We'll be speaking to some very interesting people. Do register, come in, and participate.
Have a good evening. Yeah.
Have a good evening. You have a chance to ask all of these excellent people questions as well.
No, also, I just think that frankly, because it will be interactive and because audience can ask the questions as well, it covers all the bases. The biggest news item, politics, Tamanna and Amitabh Tiwari in that conversation. So I think that lays out the things well. Then what to do fundamentally, because that's important. And two of the best voices in long-term investing, Madhu Kela and Neelkant Mishra.
I'm very excited to hear Neelkant and what he has to say, because he has such an astute policy and political sense as well.
Right, and Madhu's gift of being able to pick trends is amazing. So I think that's a great thing. And then Samina in conversation with
arguably some of the best voices on the charts and technicals and derivatives. C.K. Narayan, he writes that weekly column. Gautam Shah, fabulous guy. Kush Bora has just come out of the nowhere and caught the imagination of so many people. So I think it promises to be a really exciting, all-base covered kind of an event.
So that's the evening plan, guys. If you want to hear all these gentlemen out, and of course talk to them, ask them your questions, learn from them, and of course build portfolios by learning from the best, please be there this evening. But talking about the markets and keeping the focus, a quick check on implied Nifty, because we've been arguing about how this could actually turn out to be another positive morning for the street. Let's not forget we've rallied up quite well yesterday, a 3.5% up move, recovered 50% of our losses of Tuesday. This is despite FIs actually not coming in and buying the street. But talking about that one space that has got all our attention is what happened with banks. We have Harsh who's joining us to talk to us about the election impact. No, let's start with the exit poll impact, the election impact, and of course what FPIs are thinking as they still haven't come back lock, stock and barrel into banking names. Harsh, take it away.
Well, thanks so much for that, Samina. Let me first start off by, really highlighting that over the year-to-date period, the Nifty Bank has done absolutely nothing. So it's a zero return kind of an index where the Nifty has returned 4%. So there's been an underperformance visibly. Let's pull up the names and see where that underperformance really is coming from. Roughly 80% of the Nifty Bank is about 5 names. You've got HDFC, ICICI, SBI, Axis and Kotak. And you look at the year-to-date returns outside of SBI, not really sizable returns across the board. ICICI may be a positive 10 and Axis may be a positive 5. But what is more interesting is the 5-day move, because that seems to be the election impact as such. 6% down on SBI. Outside of that, really no major moves despite all the volatility that we've seen. Pretty much flat across those other 4 constituents of the Nifty Bank. Let's pull up the Q4 numbers to try and understand operationally how have these banks been doing. And what we really seem to be coming down to is margins continue to expand in a tough environment. Outside of ICICI, you look at those small increases in margins despite a very difficult deposit environment. That increase in margins is definitely a positive, and PAT increase on a high base also a positive. ICICI Bank a wee bit lower, but no concern per se overall, even for an ICICI Bank. So that's very, very positive. Let's pull up the growth numbers, and I've had to take these sequentially only because of HDFC Bank, that being the culprit, largely because HDFC Bank year on year is not a comparable, and therefore loan growth, what you're seeing is holding up. But look at the deposit growth numbers. Marked increase in deposit growth numbers. You can clearly and visibly see the focus now coming back to deposits, and despite that growth number, margins have held up. So very interesting set of numbers that we've seen in Q4. Last off, let's have a look at the valuations before we look at the larger picture of flows. You're looking at ICICI, SBI and Axis trading at a slight premium, justifiably so. HDFC and Kotak have their own set of issues, but the upside is largely in HDFC, ICICI and SBI currently, is what the 12-month average from Bloomberg seems to be suggesting. Now, onto the flows, because we've seen $1 billion of outflows only within financial services in April and in May. So there could be a case where if financial services or if FII flows were to come back, financial services being 40% of the Nifty in terms of weightage could warrant a higher contribution by FIs and could be on FI radar. Therefore, could be a case that if FIs were to come back, this particular pocket may do particularly well.
Thanks for that, Harsh. That's, of course, what it looks like. And it's all about banks. And, we've talked about this. Harsh has indicated as well that if FPIs have to come back, they will be coming back to the large cap banking names. But, Harsh, this is one stock you follow, and you follow closely. And it turns out there's also a report on UBS, on HDFC Bank by UBS, where they think that, exactly reiterating what you said, if the money's got to come back from foreigners, it will move to HDFC Bank. You want to take us to what that UBS report says?
Well, yes. So UBS, what it's suggesting is that HDFC Bank, in terms of headroom, had roughly 24.95% of headroom for FI investors in March end. Now, typically, if the headroom is 25% or more, just for clarification, 25% or more, you basically have the scope or the opportunity to increase or hike the weightage on HDFC Bank within the MSCI index. That MSCI rejig is expected in August of this year. And therefore, with the $2 billion of outflow, which we just explained in April and in May, you could have a case, and UBS believes that there is a good case that HDFC Bank's headroom has gone up, and therefore a good case for MSCI weightage increase. And if that were to happen, what UBS is essentially forecasting is roughly $3 to $6.5 billion of inflow coming into HDFC Bank. How large is this for HDFC Bank? At around 11.5 lakh crore of market cap. This is around 8 to 17 days, my apologies, of the average daily trading volume for HDFC Bank. So that's quite significant. They also believe fundamentally NIMs and ROAs are set to improve and gradually improve over the next 2 years. So keep your eye out on that as well. They have a buy on it. Target price being 1900, a 22% upside in this market.
So, Harsh, the interesting story with HDFC Bank is that everyone's been bullish on it for so long, waiting for FIs to come in for so long, that now the question is, when is it going to happen? There's no real mystery there. But interesting take from UBS nonetheless. Thank you so much for that. I just want to pull up the implied open because it's been gyrating wildly this morning over the last, a few minutes. It's going from 57 up to at one point 150 up and then now back down again. So you're going to see an interesting start, a real tug of war between the bulls and the bears perhaps. But Shrikant Chauhan is joining us this morning. Shrikant, very good morning to you. Great to have you on. And this is the day really when we have to figure out what to do. Nirav is there as well. Nirav Ashar, welcome and good morning to both of you. Shrikant, I'm going to start with you though. What is the expectation today? Because fundamentally the stage is set in terms of the concerns lifting, etc. We showed a very, very smart, move yesterday. Do you see that momentum continuing on the Nifty and the Bank Nifty?
Yeah. Good morning, everyone. I think, this market is currently facing a smart pullback from the lower levels. It was a deep decline on Tuesday. And after hitting the levels of 21,300 or 200, which was very close to 200 days exponential moving average, we saw smart recovery in the market. But the base part of the overall last few days sessions is that the market managed to sustain above the levels of 21,700, above which it was consolidating since the last 4 months. And that has actually supported the market heavily. In fact, yesterday also, when there was decline in the market, we saw a good amount of buying support, close to 21,800 levels. And from there, all the way, the market recovered back to 22,300, which was the intermediate resistance level for the market. But the market managed to surpass almost all its important levels and finally it closed at 22,600. So we believe that we are into extended pullback mode. We are now very close to 22,800, 850, where the market has spent time when it was consolidating within the broader range. So around these levels, we are expecting some profit taking. It is advisable to take some profit on long positions or reduce long positions around these levels because I am expecting market to consolidate for next few days. Till the markets are not crossing 23,000 comfortably, we are going to see some range bound sort of activity. So if there is any higher opening, try to take some profit. If there is any correction during the market, then close to 22,400, 300, the market is having excellent support. Around these levels, again, we should look for taking some long positions.
Wow, what a positive view coming in after, especially what we've seen over the last few days. Nirav, fundamentally, it seems like everything had changed even fundamentally for the markets, even though these are not things that happen daily. But between Monday, Tuesday, Wednesday, and of course this morning, it looks like there is some stability that's returning back to markets. It's back to basics, back to fundamentals. You'd agree?
Yes. Good morning, and thank you for having me on your show. Definitely, there is signs of stability in the market. And we've had a tough day as far as the 4th June was concerned. And I think the big concern is the resurgence of the regional politics, the regional political parties. This is a trend which I think needs to be arrested. And I think that has been the concern of the market. But I think as of now, of course, there is a huge relief in the market. And I think markets should move up from the current levels. Yes, there are fundamental factors. Yesterday, I think we had the Brent crude prices which have corrected. And we've seen an impact of this on various sectors like FMCG. We've seen impact on paints, tires, auto sector, etc. So I think things are beginning to move in various sectors. We've seen movement yesterday in metal space also and auto also.
All right, we'll take a very short break, but we're coming back with Shrikant Chauhan's picks for this morning and a lot more. Stay tuned. All right, welcome back. You're watching India Market Open. Less than about 30 odd seconds for the pre-open rates to hit, and this is going to be an exciting one. Shrikant Chauhan, this is the best time to know what your top picks are for this morning.
Yeah, Tamanna, I think in last few days, if we see the overall performance of sectors, then metal stocks did really well. Whenever they have fallen to their extreme levels, they recovered back sharply, and most of the time they managed to close near to their recent highs. So based on their technical formation, we are of the view that we should look for taking these stocks on the trading side. In that specifically, we like Hindalco. I heard that there is some negative development. So we could see some sideways sort of activity in the first half. So maybe after the open only, we will look for Hindalco. But Tata Steel looks really a strong candidate to buy for. It is consistently holding above the levels of 160, 165, which is positive. And based on its technical formation, it could see the levels of 180, 83 in the near term. Hindalco, we were positive, but I think there is some development, so we need to see later on. But Tata Steel at current levels around 170, 72, it's a buy with a stop loss close to 165 with a target of 185 on the higher side. And the other stock which we like is Power Finance Corporation. It was around 570 levels. From there all the way the stock has fallen to 430, 420, and now again it is recovering back. So amongst PSUs, if we see any specific one or two stocks, then PFC is delivering really decent return on every time frame. So PFC looks strong bet to buy around 470-75. Around 440, 445 with a target of 475, 480, and we can keep stop loss somewhere close to 430.
Right, those are a few technical picks coming in. It's pretty open and it's actually looking pretty solid. But of course, these are early ticks. We're not going to get too carried away. In pre-open trade, the Nifty is in kissing distance of 23,000, 1.3% high. Now, this is how it works out. It's going to make traders very, very excited on the street. Lots of stocks will be in focus as well. Remember, yesterday, all the Nifty 50 counters went home in the green. Whether that plays out today is going to be something we'd like to watch out for. Nirav, fundamentally, so many stocks are available 15-20% cheaper. I'm assuming what was a buy last week should remain even more attractive buy yesterday and today. Anything that you've picked in this recent fall that looks attractive, because there are still some stocks out there that are looking relatively cheaper?
Yes, I think in the auto pack, we've been looking at the two-wheeler space, and I think we've seen good moves in Hero MotoCorp. We've seen good moves in TVS Motor Company, Bajaj Auto. So I think these are the preferred areas for us. And I think we've been looking at FMCG also. We've been looking at HUL. We've been looking at stocks like Jyoti Laboratories, etc. So selectively, we have been picking up stocks in this sector.
I'll tell you why. Right. Shrikant, yesterday what we did notice is that there were some areas in the market that maybe stayed out in terms of participation. So a lot of the PSU names, BDL, HAL had it quite rough even in trade yesterday. Now they were in a structural bull trend is what most technical analysts were of the opinion. Do you feel like this interim breakdown is a buying opportunity? Do you feel like these stocks could lead the way up in today's trade and hence could potentially be constructive on them?
I think, the overall momentum that we saw in last 1.5 years, it was mainly from all these PSUs. And after this specific development, we saw a good amount of profit taking or offloading long positions. So till the markets are not stabilizing, till the markets are not giving the clarity that it is comfortably holding above the levels of 23,000, we could see some sideways sort of activity or some consolidation sort of activity in all these stocks. We are not expecting furthermore steep decline in these stocks, but yes, they could consolidate at the lower boundary of the entire trading range. But if we see the market starts trading above the levels of 23,000, then yes, all these stocks can do again really well, because the overall momentum, the overall long-term trend, it's still intact. They were not corrected at all in last 2 months, and that's the reason we saw massive correction when there was specific development. But otherwise, I'm of the view that they are going to consolidate, and eventually again we are going to see rally from PSUs.
Well, it will be interesting because remember, as we said, that yesterday the PSU action was very mixed. There were some which really cracked and some which did really well. We've got one which cracked a little bit yesterday, by the way, GRSC, on our show today a bit later on. So it'll be lovely to understand from them about the business aspect. But today, Garden Reach is up about 2.3% as well, or 2.9% actually. Early rates, but let's wait and watch. Nirav, one quick question. Yesterday, the last 2 or 3 days, the TDP-linked stocks, whether there is an actual linkage or no, is separate. Except for Heritage Food, of course, which has got a direct linkage. But the belief that infrastructure projects will start with a bang, so from an NCC to a KCP Cement to a Ramco Cements, all of them did really well. Would you bet on any of these? And fundamentally, if you're betting on any of them, what are the fundamental reasons for the same?
Well, yes, I think definitely we would like to have a look at all these stocks, but it will be on a case-by-case basis. And I think there is a huge potential for development in Andhra Pradesh. And of course, we've seen good momentum in stocks like KNR Construction yesterday, NCC, we have KCP, which has been doing quite well. So some of these stocks could be big beneficiaries of the demand, which is going to which is expected to come up in the years to come. So definitely we'd like to have a look at these stocks.
Okay, well, those stocks are up and active and half. But it's time to tell you what some of the key brokerages have said. And remember, it's a tough time for them as well. Between Monday, Tuesday and Wednesday, they might have had to change the view 2 or 3 times, depending on what the situation existing. But now that the situation is clear, it's good to get you one key view. So we're getting the Morgan Stanley view on India, and they say that this remains India's decade. Actually, we missed the best line of the report, which says that Modi 3.0, this remains India's decade. That's the key crux of the note. Now, the assumptions. They are making that the 12-month forward Sensex target is 82,000 for Morgan Stanley, which implies about a 14% upside. So that's the first thing that they see upside during the rest of the year, 14% on the Nifty. They say that if the earnings growth forecast through FY26 for them is 500 basis points higher than consensus. Clearly, Morgan Stanley believes the next 2 years, the earnings growth could surprise significantly positively on the upside. Remember, the Morgan Stanley Investor Conference is 4 days from now, and we'll be talking to Rhythm Desai on this note on the sidelines of that event as well. Morgan Stanley forecasts GDP growth of about 6.8% in FY25. Not bad. Again, you could argue maybe slightly higher than the consensus or more spoken about number of 6.5%. And of course, they also go on to say that from a portfolio strategy perspective, they like cyclicals over defensives and large caps over the small and mid caps. So this doesn't change too much. The fact that they like cyclicals over defensives, which means that they are reasonably aggressive. And from a sectoral perspective, except for these 4 sectors, they are underweight everywhere else. So they are overweight financials, they are overweight technology, they are overweight consumer discretionary and industrials, and they are underweight every other sector. But guys, 82,000 on the Sensex as per Morgan Stanley for the rest of the year. That's not bearish at all. I mean, it may not be extraordinarily bullish, but certainly not bearish.
It's a good number. It's a good number, especially in the midst of everything that we've seen and in putting in context for the recent moves. Well, we've talked about a few stocks, but Shrikant, before we go into market open, Adani stocks, anything that looks good there? Because they also sold off very sharply after, of course, Monday's up move in trade on Tuesday. Not a significant recovery yesterday. Do you feel like today could be a day when Adani stocks could make good intraday longs?
In fact, Samina, from yesterday only in the second half, we saw a good amount of buying interest in Adani Enterprises as well as Adani Ports, Ambuja Cement, ACC. But most of the time, whenever we see there is uncertainty in the market, we see specific buying interest in stocks like Adani Ports as well as Ambuja Cement. Based on their technical formation, I'm of the view that again we are going to see recovery or pullback sort of trend in all these stocks because the sell-off was much sharper than expectations, and it was all these stocks have broken their important supports. So we need to see that whether they manages to sustain above their important support levels on a weekly basis or not. I'm to say on Friday, but for the day, yes, we could see the levels of maybe 1430, 1450 sort of levels for Adani Ports, and for Adani and for Ambuja also 620.25. Looks achievable. But at current levels, I think the trading opportunity is not that favorable because the risk-reward ratio is not that favorable. So it is better to stay away. But yes, if there is any position, then try to reduce those positions close to important resistance level. I am expecting all these stocks are going to consolidate for next few more days.
Shrikant, just wanted to get your take on a couple of counters that have seen news flow today and are doing well as well. Uno Minda, do you have a view over here? Seems well poised for the whole EV push as well, and BHEL with that big order win.
Yeah, see, like for Uno Minda, it is consolidating and it is relatively outperforming to the entire space. It is holding well above the mark of 850, 900, which is certainly positive. And whenever the stock is rallying, it is consolidating and again rallying to the next levels. So this time also I am expecting stock to spend some more time between the levels of maybe 900 and 850. But eventually we are expecting stock to move towards 1000, 1050 sort of levels. No doubt previous highest levels, 930, 940, is going to act as immediate resistance for it. But the broader pattern is suggesting us that the stock is bullish. And the other stock on which you discuss is BHEL. Yes, there also we saw dip decline, but the stock is still holding well above their monthly and quarterly lows. So which is positive. I'm going to say the stock is still into uptrend, and we could see the levels of 300, 310 in the near term.
What about banks? We've been betting on a recovery in banks or an extension of the rally, and most people have said they like private sector banks versus PSU from a medium-term outlook. What is your take on HDFC Bank? There was also a report by UBS that said if FPIs have to come back, which is only a matter of time, HDFC Bank could be a key beneficiary to that. Nirav, that's for you.
Yeah, I think HDFC Bank definitely we have a long-term view over there, and of course at this point of time there is a certain amount of uncertainty, but I think it remains a buy. It's a stock which we have been accumulating. Apart from that, we've been looking at ICICI Bank, State Bank of India too.
Nirav, just wanted to get your take on the whole FMCG pack. The last 2 days have been brilliant for them, but in the context of perhaps a defensive play, new government focus, etc. What happens now to all your Daburs and Imamis, etc.? Do you see more of a run up there, or they go back to sort of the deep freeze for a bit?
Yes, I think we expect some consolidation in these stocks because the run-up has been quite sharp. And I think most of the positives have been factored in also because yesterday, as we had discussed, that in the case of HUL, they've got the benefit of the revival in the rural economy, plus the prices of crude oil, which have cooled off. And we know that 51% of the portfolio is soaps and detergents, where we have crude-based derivatives. So I think that is going to ease the margin pressure also as far as HUL is concerned. So HUL benefits on account of this. We have other companies like Dabur, which have said that they've been ahead of the curve as far as the investments are concerned. And the various investments which they have made have helped them to report a growth in rural markets, which is 400 basis points above the urban. So I think all the hard work which has been done by these companies is really paying off as far as the FMCG companies are concerned. On the other hand, we have smaller players like Jyoti Laboratories also, which have reported a fantastic operating leverage. While the sales are up around 12%, the EBITDA has moved up by around 52%. So this is the kind of margin expansion which have happened in some of these companies. And I think the valuations are now trying to play catch up with these developments.
Okay. Well, 48 seconds left for the markets to kickstart trade. Maybe I've missed this, Shrikant, but and maybe we've done this, but I'll still ask you. At the end, on the basis of the pre-open rates that they've settled down, we have 30 seconds, Shrikant. If you had to bet on one stock, which one would that be?
Yeah, I would like to go with HDFC Bank. The reason is because it is holding comfortably above the levels of 1550, 1560, where it has spent a lot of time. So based on technical formation, I think the stock can move to the levels of 1650 or 1660 in next few days. So it's a buy. If there is any correction, then I don't think that the stock will put below the levels of 1520. So the risk-reward ratio is quite favorable for creating long positions.
Got it, Shrikant, thanks. And that's HDFC Bank, and it's also not open very high. So you still have the ability to be able to go out and buy. It's a very liquid stock. Watch out for HDFC Bank from a trade perspective. 0.5% higher for the Nifty 50, about 100 odd points, 1/3% for the Nifty. The banks flattish though. Wonder maybe it's FMCG which is taking the markets higher. Maybe we'll talk about it. Midcaps up about 1%, so that's the big thing. The market breadth would be very positive because the small cap index is up 1.5%. Usually this is what happens on a flurry day of the Nifty. The small caps underperform and then they start outperforming. FMCG is in the green. Let's pull up the Nifty 50 heat map and see what is actually driving the markets higher, because Bank Nifty was not necessarily very buoyant. Okay, it's a slate of PSUs which are doing this. So NTPC, ONGC, Coal India, Power Grid, BPCL, Shrikant John mentioned about PSUs perking up. They're certainly taking the index higher. Adani Enterprises is up about 1.3% as well. Not a PSU, but just laying it out that stock is in the green. Adani Ports is up about 1%. Tech Mahindra is up about 1%. So it's actually a varied set of names which are doing well on a day when it seems to be even Stevens between the red and the green, or maybe a bit more green. But clearly PSUs holding fort very, very strongly. 2.5% now up for Adani Enterprises. Watch for that. What's not doing well? Actually, the trade of the last 3 days, just taking a bit of profit booking maybe. HUL down 2%, Britannia down 1.5%, Nestle down about 1%, Tata Consumer down slightly around 1%, and a lot more green now, the Nifty up 0.5%. Well, very, very, very different move than what we were used to the last 2 days. For some of you who might have gone long on the FMCG stocks based on yesterday's up move, well, we'll ask Shrikant if the stop losses have been triggered or no based on yesterday's closing calls if you took it long. But clearly, PSUs and some of the high beta names are coming back on the index. Wonder if that's the case at the broader end of the spectrum too.
Yeah, absolutely. That was the question we asked Nirav just before open. Do all the FMCG numbers go back into the deep freeze where they've been? But the broader market's doing even better. And 1.5% up on the mid-cap 150. Let's pull up the small cap index as well, 2% up. So that's where all the action and excitement is really being seen. So just a couple of stocks that we want to talk about this morning. We put together that whole basket of sort of TDP impact stocks we've been seeing moving very interestingly since the last couple of days, and we're pulling that up as well. Heritage Foods 10% up again. Ramco Cements taking a bit of a breather. Now, why have we picked this stock? Because some of them are based in Andhra Pradesh. Some of them have, Heritage Food, for example, has some of Chandrababu Naidu's family on the board, etc. So that's how the street is looking at it. Amara Raja, the person who runs it, used to be a TDP MB, Jaydev Kalla, 6% up on that. KCP, another 18% up. This is something Niraj has spotted in terms of location-wise, close to Vijayawada, which is the dream city for Chandrababu Naidu. Now, defense has also been seeing a recovery. We'll pull up some of those numbers. HAL, remember, HAL was beaten down the last couple of days, about 6% up today. So that's where the story is really going. BHEL has that order win coming in from Adani Group. So that's 8% up for BHEL. Fantastic opening for this stock. Uno Minda, RVNL, all of them with order wins or tie-ups today. Uno Minda, an interesting stock to watch out for in the whole EV focus in Modi 3.0, about 6.5% up. RVNL was the order win, about 300 crores from Indian Railways, 5% up this morning. Just Century Textiles and Torrent Pharma, the other two that I'll pull up. They were newsy stocks that we were talking about. Century Textiles has a joint venture for a luxury property in Gurugram, so 6.5% there. Torrent Pharma has seen the nod for a new drug in India. Not moving too much, but not bad. 1% up in the green. So I've picked all the winners, Samina, and I think that's the large-scale mood in the market.
It's not looking too bad for the broader markets this morning. Topping the list of gainers is BHEL on back of that order win from Adani Power. I don't know whether Tamanna mentioned that, but the stock is up 9% as we see it. Railway stocks back in focus. Defense stocks also not doing too badly. Titagarh Rail is up 8%. Cochin Shipyard is also up about 8%. These were stocks that sold off very sharply on Tuesday. Didn't do a significant recovery yesterday, but what you're seeing today is a little bit of a catch-up with their peers in trade. Mazgan also is up 6%. Pull up Garden Reach as well. These were very early in simple trades all through the last quarter where it was a down day and you'd pick up these defense norms and you would be in the money. Pull up HAL and BDL as well while we're at it because those sold off in trade yesterday as well. HAL is up 5.5%. So the stock looks good. BDL, which also got beaten black and blue, is up about 5% as we see it. So not a bad day for these counters in trade. Apart from that, Jupiter, so Rail is also doing well. Like I said, Titagarh Wagon, RVNL on back of order win. Jupiter Wagons is also seeing a 7% uptick. Along with that, you've got PFC, REC that are looking good. All Adani counters are also trading in positive territory. NBCC, they had a pretty big order win. Let's see what they're getting up to as well. You should see an up move on us, 7% on NPCC. So back are the days of 7, 10, 12% sort of gains on stocks in the broader markets. Real estate continues to look good. You've got infrastructure names also trading with a very, very clear positive bias. The NCC, GAIL, are some of the other names that are having a relatively strong start in trade this morning. On the sell side, it's defensives, profit taking after 2 days of a strong up move across consumption names. HUL, Britannia, Godrej, Nestle are your top gainers with cuts of 2 to 2.5% trade. Emami, Dabur, United Breweries, Marico also trading with cuts of 2%. Pharma also looking quite weak. Dr. Lal's trading with 0.5% cut. So it's risk on from the look of it. But Shrikant, very quickly, markets have opened up, some with a pretty big gap up. Give me a quick trade for today after seeing what we've got in the after seeing market open.
Yeah, I think like market is again reversing back after hitting the levels of 22,800. So we are of the view that today it is better to focus more on stock instead of focusing more on the index. I'm expecting market to consolidate at higher levels. But in this particular space, if we really would like to go for any specific stock, then Bharat Electronics looks good because yesterday there was hardly any momentum in all these defensives. But today, we are expecting defensives in that defense stock specifically to do well. We like Bharat Electronics, which is around 275. There the target is around 295. And we can keep today's low as a stop loss, which is around 265. We also like Bank of Baroda from the PSU banks. And in that, currently it is around 267, but the target is around 280. Keep a stop loss somewhere close to 262 for the same.
Tata Steel buzzing this morning. Let's just pull up that counter. So Tata Steel has clarified that they are in discussions with the Dutch government for a decarbonization roadmap. Premature to draw any final conclusions at this time. They are responding to a newspaper report which claimed that the Dutch government is paying them 3 billion euros for decarbonization. Now they're saying that no, I mean, we're still in discussion, so it's premature. I think that's still a positive because at least that discussion is on. So the stock doing fairly okay, 1.5% up. Nirav, just wanted to get your take on the entire metal pack and Tata Steel, of course, on that one news flow. But what's the broad view there?
Yes, I think we remain positive on Tata Steel as well as Steel Authority of India. And as far as Tata Steel is concerned, as well as the entire steel industry, the focus is on clean steel, green steel, and sustainable steel. So I think there is a lot of move which is happening towards decarbonization and moving towards the electric arc furnace route. And I think that augurs extremely well for the entire industry. So I think the frontline steel players should continue to do quite well.
This thing about Tata Steel, one, that the government will pay it money, because you can kind of understand why it would happen in the Netherlands, a country, very low-lying country, very, very strict about what is happening as far as emissions go, because they face a threat about rising sea levels. So in some sense, you can almost believe when something like this comes out that if it is possible, yes, it is possible in the Netherlands. Two, I mean, Tata Steel gets... we don't know the quid pro quo for something like this. I mean, is it just a grant? It may not be profits, but even if it is, to payouts and incur the whole expenditure. Yeah. But even if it is a grant without anything Tata Steel has to give, and if it helps them just clean up the plant, because they would do it for Tata Steel because it's a major employer.
No, and also
in that country.
When we spoke to them at this quarter earnings, I think while they had resolved all the issues in the UK, in terms of plant closures and made those payments, struck that deal with the government, there was a little bit of an overhang because there was no indication in terms of conversation with the Dutch government. Of course, when we spoke to them, they said that they expect it to fall on track and be exactly in line with the kind of deal that they'd struck with the UK government. But if you look today, in the UK situation, they had to shell out money. And if this 3 billion is coming their way for changing their plans...
That was for employment. That was for plant closure.
Yeah.
This is for an environmental
moving to an efficient But the investment could have to come from them as well, right?
Yeah.
The fact that the government is, and the fact that these conversations have been underway, had been an overhang on Tata Steel for the last couple of years.
I suppose European Union is also very, very clear about moving to, cleaner industry and are willing to pay for it.
Especially Netherlands because of the area. And of course, Tisco being such a large employer.
Yeah. Interesting. So Tata Steel in focus, the railway stocks in focus. Shrikant, I just wanted to get your take on any of that pack, rail, PSUs, all of them completely shining today. So are the defense players, Cochin Shipyard, HAL, all of them are back. But let me start with, your view on which do you think are the most attractive in terms of the railway stocks?
Yeah, Tamanna, I think from the railway space, we like RVNL. The reason is because it is relatively outperforming to almost all the stocks, and whenever there is a correction, we see a smart recovery in the stock. The correction was also lesser than other stocks. It is currently around 373, 375. Yes, we could see some consolidation, but eventually we are expecting stock to do well. In the near term, we could see the levels of maybe 410, 415 sort of levels on the high side. From the defense space, we like Bharat Electronics, and from the power space, we like Power Finance Corporation.
Okay. Shrikant, just one quick thing. HDFC Bank is actually in the red after starting off in the green. You would use this opportunity to load up?
Yeah, I think, it is, yesterday there was smart gains for HDFC Bank. We could see some sideways activity, but broadly we are of the view that it is going to consolidate around these levels, but eventually it is heading higher because since the sell-off that we saw in the stock on 17th of January, after the dismissal of the, disappointing numbers, since 17 Jan to till date, we saw a good amount of bullish consolidation in the stock. And now it is on the verge of crossing that. So the real target which is coming out of this particular pattern is around 1750, which is unbelievable. But yes, this is what we are going to see in next few weeks or months. It will take some time, but I think the stock is heading higher.
If not HDFC, which you do believe is in a consolidating phase, what about SBI, bounce back today?
Yeah, there also we see some activity because yesterday there was a completely muted sort of activity in all the PSU banks. We could see some retracement, but at these levels, I am of the view that it is better to buy if there is any correction in the market instead of buying at these levels because the market has already reached to its important level of 22,800. And in the past, if you see the overall trend and range of the market, then it was between 22,800 and 21,800. So yes, we could see some correction. Let the market stabilize somewhere close to 22,500, 400 levels. Then again, we may look for taking some more positions. Otherwise, we need to be more and more choosy while taking positions in the market.
All right. Thank you so much, Shrikant. Thank you so much, Nirav. Great speaking with you this morning. It's looking like an interesting morning and maybe just slowly and surely, markets building up steam, losing some of its initial gains right now, but still very much in the green, above 22,700 on the Nifty. We're taking a very short break. When we come back, the sector in focus, not just from a perspective of today, here and now, but also the next 5 years. We're talking about the defense sector. The management of Garden Reach Shipbuilders will be with us after the break. We'll also speak to Midhani in the next half hour about what their forward-looking plans are. Stay tuned.
Welcome back. You're watching India Market Open. It's the second straight day of gains rolling in for D Street. The big conversation, or rather the big movers today, of course, are PSU names, and defense in particular is having a pleasant start. Well, to talk about what's going on with the sector, talk about the next 5 years, of course, we have with us none other than PR Hari, CMD of Garden Reach Shipbuilders and Engineers. Mr. Hari, thank you very much for joining us this morning on NDTV Profit. It's an absolute pleasure. Your company is run beautifully well and has generated enormous amount of investor wealth in the recent past, barring, of course, what we saw on Tuesday. I want to start by talking about what is happening in the industry, but I'll take a cue from the Prime Minister's victory speech, where he clearly stated that one of his focus points will remain Make in India, especially for defense. You want to share your thoughts on that? Because the market did get a little nervous very soon after what we saw on Tuesday.
Thank you. A very good morning to you. Yes, the focus is on defense and specifically for the Make in India efforts of the nation. Just to place on record, currently 66 ships, warships are being built for the Indian Navy, and of these 66, 64 are being built by Indian shipyards. That is the kind of opportunity that we have today. Just before I move on to our vision and what we plan in the next few years, I would like to make a mention that FY24 has been an excellent year for us, with our revenue from operations growing over 40% to a new peak of 3,592 crores, and the PAT rising by 57% to 357 crores. What we have today is an order book of 22,652 crores, and these mostly comprise of warship building orders for 4 naval projects, that is 4 projects for the Indian Navy, 3 P-17 Alpha ships, 4 survey vessel large, of which 1 has already been delivered, 4 next generation ocean going patrol vessels, and 8 anti-submarine shallow water crafts. The ongoing projects, as per the current build schedule and our build strategy, we intend completing by FY 27-28. Now, coming to what is on the anvil. Okay, before I move on to what is the RFPs have come out and what is not, what is on the anvil, just like to state that GRSC has recently won an order from the Ministry of Earth Sciences for an oceanographic research vessel. The order value is around 840 crores. Plus, we have been declared L1 for a project for the DRDO, the Naval Physiological and Oceanographic Laboratory, for a project, a research vessel around 500 crores, and also an export project for the government of Bangladesh for around 180 crores. The negotiations are in progress. So these are the orders which are likely to be concluded or what we have achieved recently. Now, Navy has come up with an RFP for the next generation corvettes. The total order value is around 36,000 crores. This is a big ticket order. And as per the RFP conditions, 2 shipyards will share this bulk of 8 warships. The L1 shipyard is likely to get 5 ships, and the L2 shipyard 3 ships. And this is an order that we GRSC are eagerly looking forward, and we will be bidding aggressively, considering our experience having built corvettes. In addition to this, the Navy is likely to come up with an RFP for 2 multipurpose vessels. The order value is likely to be around 1,200 crores. The Coast Guard, Indian Coast Guard, is likely to come out with an RFP for 18 next generation fast patrol vessels and 6 next generation ocean going patrol vessels. So these are what is likely to come out in the next 1 or 2 years. Thereafter, as per the plans of the Navy, we expect the RFPs for the 2 landing platform docks to come out, 21 water jet FPC to come out, and also next generation survey vessels, 5 of them. So what is likely to be in the kitty for the Indian shipyards in the coming years is very attractive. And all these orders are likely to be given to Indian shipyards in line with the Make in India policy.
Mr. Hari, we're just going to take this one at a time, and thank you very much for breaking down your order book for us, what is local, what is global in a minute. I want to get a quick sense because margins have also seen a substantial improvement, and we've been seeing this historically. This year, of course, your your margins have actually been, not looked bad, in fact, for the quarter. You want to give me a sense of these new orders and what the margin picture there is, and what is the outlook going into FY25? Further uptick can be expected?
See, as far as the margins are concerned, as you rightly said, we have maintained margins. As a matter of fact, our margins during the last quarter, that is Q4 of FY24, has been very encouraging. And with our current strategy, internal efficiency improvement, we are confident of maintaining similar margins during FY25 also. Coming to our revenue, we had touched 3,592 crores during the last financial year. And if you just see, in FY20, we had touched 1,433. In FY22, we had touched 1,700 odd crores. And in FY24, we have touched 3,592 crores. So if you just take a 4-year bracket, the growth has been over 200%. So this is the kind of growth that we have maintained in the last 4 years. And considering that our order book is expected to complete by FY28, we expect the revenue from operations to peak during the next 2 years.
Commodore, good morning. Niraj here. Trying to get a sense of what will the execution be. Guessing order booking is not a problem. The quantum of orders that will come in also is not a problem. What is the rate of execution and what's the kind of growth that could come in? I'm presuming you already said that the exit margins of 8% is what you could maintain as a year for FY25.
Thank you, Niraj. Now coming to the projects in hand, we have 3 P7 Alpha ships. The first ship is at around 70% and the last ship is around 50%. So the first of these ships we intend delivering during the next financial year, mid of the calendar year 2025. And the third of these ships will be completed by the mid of 2026 calendar year. Now coming to the survey vessel large, we are currently executing a project of 4 ships. One has already been delivered. The second ship is currently in trials phase, expected to be delivered in a couple of months. The third and fourth ships will be delivered by mid of the next calendar year. Similarly, the anti-submarine shallow water craft, the first ship has already touched around 85% of physical progress of construction. Currently undergoing trials, expected to be delivered in a couple of months, and this project will complete by FY27. Coming to the next generation ocean-going patrol vessel, 4 ships under construction. We signed the contract only last year. This project again is very well on track, and we intend completing this project by FY28. So this in a nutshell gives you the execution plan for the projects in hand. The new projects, that is the oceanographic research vessel, then few orders that we are expecting from the commercial shipbuilding sector, this might spill over considering the project execution schedule.
So, Commodore, again, just trying to get a sense, I mean, the run rate of growth on a quarterly basis has been phenomenal. YOY as well. The numbers move up by about 1,000 crores each year for the last 2. I'm just trying to think on a higher base, will the growth rate moderate a little bit? Because as I said, the order booking is not a problem at all. So will the growth rate moderate? You might add 1,000 crores every year, but on the higher base, it kind of moderates that. So I'm just trying to understand what's the growth rate likely to be like in percentage terms maybe.
See, when we had interacted last time, I had maintained that we'll be maintaining a growth rate of around 20%. But even exceeding my expectations this year, the growth rate is around 40%. So to be on a moderate side, neither conservative nor too aggressive, we expect the growth rate to be around 20 to 25% in the coming years.
Sir, just one last question. We'd love to have chatted with you longer because this is such an exciting space for everybody. You talked about how and of course Niraj also mentioned that the order book locally is looking extremely well placed. But given the kind of developments that are happening internationally as well, you mentioned a couple of order wins on your export side. You want to tell us what that book is expected to grow by and whether or not the margins there are better, and hence if your exports grow significantly, I'm assuming the whole picture looks a lot better than, it already looks great, it only looks better into FY25.
Yes, the opportunities in the global shipbuilding segment has increased, and now most of the global players, including the European countries, are looking at India as an area where shipbuilding can be encouraged. So we are in dialogue. Actually, to be candid, we are in the final stages of negotiations for a couple of commercial shipbuilding orders. And just to place on record, I had mentioned earlier, we have won an order recently from the government of Bangladesh against a global tender for a 1,000 meter cubed hopper dredger. And we are also the L1 for a warship, an ocean-going tug for the Bangladeshi Navy. The final pre-contract negotiations are in progress. So the opportunities here are galore. But I would again like to reiterate that we are a defense shipbuilding company set up by the government for defense manufacturing. So our core area would be domestic warship building. But in addition to warship building, considering that we have the capability and the capacity, we would also be venturing into exports with specific focus on commercial shipbuilding.
Got it. So Commodore, just to wrap this up, you're saying that global orders could be commercial, local is warship defense-led building, shipbuilding, and one, they do not obviously stand in conflict. Does the capacity utilization ever come in conflict, or is there enough headroom for you to do both, even if the order sizes on the global front, on the commercial shipbuilding, go up multifold? Would you still be able to do it very easily, or do capacity constraints then come in?
Absolutely no issues with respect to capacity. We had anticipated a crunch about 5 to 6 years back. We had taken adequate measures to enhance our capacity. Now we are good to go with respect to handling both domestic warship building and the export orders.
Right. Thank you very much, Commodore, for joining us. What a pleasure talking to you. We'll hopefully try and connect back and have a more detailed conversation about the industry and, of course, about what's happening at Garden Reach as well, given that you are a leader in the space.
And Samina,
your stock is up
numbers.
8% as we speak. And yes, numbers are phenomenal. 40% growth on top line is
Margins
what
expand.
he's talking about. 9% versus 3.5%. An extremely healthy order book. And this is why I think, Niraj, we have seen these stocks do exceptionally well. While you have analysts who complain that fundamentally these counters look stretched, valuations don't justify it. But let's not forget the road ahead is unventured in that sense, right? And
greener pastures.
Yeah, greener pastures. But thank you for joining us, Commodore. But I guess we have somebody else joining us now too.
Yeah, so we're sticking to PSUs, Samina, and what's in store. So Midhani, probably by their own standards, on the console basis, didn't have the best of quarters. A lot of factors go behind a company which actually manufactures superalloys, titanium, etc. Mr. S.K. Jha, Chairman and MD of Midhani, joins us right now on the show to talk about what outlook FY25 could be like. Mr. Jha, good morning. Thanks so much for taking the time out. This is Niraj here. Good morning. By your own standards, sir, was the operational number a bit of a disappointment in Q4? And while there could be vagaries in what happens in a particular quarter, how do you look at the numbers from a YOY perspective? Because when I look at the consolidated numbers on a YOY basis, the operational metrics came off even as the top line numbers had grown.
Yeah, in fact, if you see our main focus this current financial year, the last financial year, was mainly to reduce our inventory and WIP. So in this process, normally in the last quarter, you might have seen that our value of production has gone down slightly. However, we have achieved the highest ever sales in this quarter, and that has also given the better performance in terms of our rate of return also. And also we have got a good reduction in our inventory. In fact, from the last financial year to this financial year, the current financial year, that 23-24, almost we have reduced our inventory level of almost by, it has come to 1/4, I'll say, from that previous to that. So that has really helped the company to get the clear and reduce our inventory. And in fact, it was also the one of the concerns we had, that that number of days which we can keep our that working capital engaged has to be reduced, and that was the main challenge. And we have got good success in this area, and this will be giving the better output or better result in the this current financial year, because the FY 23-24 had the pressure of, in fact, the raw material prices were very high. So we had the the problem was that how to cut down our consumption of the raw material. So that was the main reason for keeping that. We should not keep the more inventory. And also we had another challenge, that how we can improve our operational capability to maintain our profit. So these are the, I think, few challenges we have faced. But if you see, the sales turnover has crossed 1,000 crores this year. I think this is a very good, I'll say, the achievement for the company. Company has the sales turnover growth of 23% this year, and that is going to be a good advantage in the coming this current financial year also. And it is also giving the good path for the company to grow. And as we have seen that lot of capex we have infused in the last 4-5 years. So that return also we are expecting that it will be coming for the company in the coming days. And overall I see that the impact of the raw material price will get stabilized in this current financial year. And also, since our production of high value item, superalloys production has gone up.
Right, Mr. Midhani, just a very quick question, Mr. Jha. We understand the raw material prices is why your margins have been impacted quite substantially in the financial year gone by. But as we look ahead, do you anticipate improved operational efficiency, potential raw material cost decline, or maybe a hedge on that? Would that help margins back up to levels of 25, 26? Is that a fair assumption? Because that's what it used to be historically, right?
Yeah, in fact, the margin which we have seen earlier, because of mainly we had advantage of getting the orders coming from on nomination basis. And that numbers are going to reduce as we are going for more competitive bidding and more competitive orders. So my expectation is that in the coming days, the margin which we have got this year from this like 23-24, 24-25 will be the better performance mainly because of two reasons. First, that we'll be getting that raw material prices will get stabilized. And second part is that we are going to produce the high value item, that is superalloys production has gone up in the this year also it is expected to increase. Titanium alloy also will going to increase. So those two high end products are going to contribute for the higher return once we are seeing that once we will be closing this financial year, that FY 24-25.
Mr. Jha, what do you reckon would be the biggest impact on near-term business momentum and maybe pricing and volumes? Because one is, of course, the domestic opportunity that stays for companies, but two is also the China factor, and which impacts both sentiment as well as demand per se for supercritical metals, alloys, as well as basic metals. So, can you just explain that? Because a lot of people might be wanting to know how big an impact would the economic outlook of China have on businesses in general and in Midhani in particular?
So as far as our business with respect to China is concerned, we are not depending on the Chinese market. So my product is going mainly for the domestic requirements, which is coming from aerospace, defense, and nuclear and any other strategic areas. So you might have seen that as the defense requirement is going up, aerospace also requirement is going up. And at the same time, we also have the possibility of doing the export with the different countries. Now we have, and our product has reached to the level of many European countries. Also, we have got a very good presence in terms of Middle East also. So I see the possibility of our business will be improving in the coming days because of these regions. Now, only depending on the China factor is that raw material which is getting from the China. But we had our raw material has not depending, we are not depending on the China. Our sources are different. So I don't see that impact is going to affect as far as the Midhani is concerned. So that way we are not seeing any reason for that. And it has been already seen this year also. We have got a lot of export has gone up almost 3 times. If you see from the last financial year, that is from 22-23 to 23-24, we had almost 3 times. And now we have a very good order book position from the export, and indications are very good. So I feel that that area is also going to give a good support to the company. So the growth wise, I am not seeing depending on the impact which is we are seeing from the China. So this is what my observation as of now. But again, you know that global scenario and all is very dynamic in nature. So it will be seen as we progress. But as of now, I see that Midhani has a very stable outlook for the coming from current financial year.
Okay, just one final question, Mr. Jha. Now, with the increased focus on defense, aerospace, etc., could the volatility in operational metrics change, or because of the nature of the business, the volatility might stay and people should look at it annually? Because, and quite frankly, when I look at it annually as well, FY24 or FY23 has been a big drop. So even that argument may not necessarily hold true about the volatility, but just trying to understand if the end product change and focus on defense and aerospace mitigates that to an extent.
Yeah, in fact, first of all, I would like to explain about the operational part. Our main focus has been shifting towards that whatever we are able to produce, we should be able to convert into the sales as quickly as possible. This has been the requirement for we have made our plan accordingly. So if our sales are going to increase, definitely we are going to have the better operational possibility also. And by addition of certain facilities now, the operational constraints we are overcoming, and I am saying that that part is going to overcome as we progress in the coming months from the current financial year. So that we'll see in terms of the performance. Now the growth of the shifting of the product from one segment to another segment, which normally earlier, if you see, my maximum business used to be in the space. Now it has gone to the defense. So the Midhani, the one advantage is that the many materials which have been used for the space are also finds application in the area of defense, as well as some part in the other, that the nuclear and the other strategic sectors. So there is a lot of common like the facility which we use for this type of products are common in nature. So I feel that those things are not going to impact. Only thing that you should have a quick a mechanism to make your technology and your knowledge based for diversification. So that base is very well placed in our company, because we are a very almost 50 year plus. So our technology and everything is very robust. So that way we are able to quickly change our product profile or product portfolio in a very short span of time. And it has been reflected in the FY23-24 also. Many grades of alloys we have developed in the same year, and also we have done the export, also we have made for the domestic industry. So that type of flexibility is there in our operation. And I think that is, one of the biggest strength which Midhani is having in terms of its product portfolio and capability.
Okay. Mr. Jha, 15-second answer, quantum, because we are out of time completely. So just 15 seconds, please. But are targets or guidance for FY25 out?
Yeah, we have already, we have our target already fixed.
So what's the number, sir? Growth number for
we are
FY25?
expecting almost, we are trying to have the similar, almost 25% growth in this year also. In the sales revenue.
Okay. Yeah. Well, we wish you all the best for that. And thanks so much for joining in, sir, and giving us your views. All the best for the year ahead.
Thank you.
Well, Street was looking up to figuring out what could be happening to businesses of PSUs. I think that's what we tried to do today, at least. For all of you who are watching this on digital, please let us know in the comment section what you thought about the conversations today. But thanks so much for joining in and giving us that and being with us on the show on India Markets Open. Stay tuned. Up next is Talking Point. Thanks for tuning into Talking Point. I'm your host, Niraj Shah. We've got the City think tank here to talk about, as a premise to talk about what the earnings have been for Q4 and FY24. But really, it's more about what could happen over the course of the next 12 months, because between the time that the earnings ended and now, a lot of water has flown under the bridge. So the gentleman, Surendra Goyal, Head of India Research at Citi, Kunal Shah, Director of India Banks Financials, Arvind Sharma, Director India Autos and Transportation, and Saurabh Handa, Director of India Oil and Gas and Telecom, with me in the studios. Wow, I wonder how will I complete the conversation in 25 minutes allocated time, because all sectors just so important. But gentlemen, thank you so much, all of you, for joining today. It's a real pleasure having you. Surendra, starting off, earnings, policy up ahead, but most importantly, the events over the last 3 days. Have they changed your outlook as on the India strategy from what it was last Friday to what it is maybe today?
Yeah. So first of all, thanks for having us here. So let me go point by point. See, firstly, from an earnings perspective, the outcome was pretty decent, right? And there were a lot of moving parts in terms of some sectors having one-offs and so on. But I think the most important thing was, if you look at the Nifty earnings revision for consensus, the direction is up. Okay, which is what kind of summarizes the view. So earnings, I would say, at the margin was overall positive. The trends are quite supportive. We saw the recent GDP data come out, which was again better than what most people expected. So I think on that side, there is comfort that things are kind of progressing in the right direction. From a election perspective, obviously, still we have to see a lot of things happening as we speak. But overall, I think a few things. Firstly, from a macro standpoint, I think there was the RBI dividend news which came in between, right? So clearly there is a lot of cushion right now. So our view is that even with slightly increased spending on rural jobs, etc., there is no real need to dial back or step down on capex infra, which the government has been doing. So there is space for that. So our view still remains that the focus on capex and infra will remain. Okay, I think in the near term, increased risk perception, there'll be a lot of noise, news flow, so the market will keep on reacting. In fact, if you look at yesterday evening when we were talking to clients, we were telling them that yesterday's Nifty close was more or less the same as Friday's Nifty close, right? But in between, there was a lot of volatility. So I think you could see that continue. Depending on the news flow and noise, the market could move up and down. But assuming that things kind of progress in the right direction, the broader story, right, which is premised around a few things: India's superior growth prospects, strong domestic flows argument, and a great macro, a top-down from an India perspective. Those are three things which are all supportive. So to that extent, I still think it's a fairly decent backdrop. And from a sectoral perspective, at this point, we have not really changed much. I think at the margin, the sector which should see some benefit is the rural side, which is consumer staples and autos. So that's the only incremental one. Otherwise, I think broadly we are comfortable with wherever we are positioned.
That's interesting, because autos have done really well thus far, while staples may have not. So I was going to ask you in portfolio rejig. So does this come at the expense of maybe some of the capex beneficiaries or some of the others? I mean, when these two sectors move slightly above?
Yeah. So again, the point I made on capex beneficiaries, etc., the names that we have in our preferred list, we are quite comfortable with the medium-term outlook. Okay, and for us, I think, as I said, we are not expecting anything to slow down on the capex side. We still think that that's something which has been happening for a while, and the direction remains the same, it's unchanged. And some of those stocks which are a play on that, where there is a very good medium-term visibility, they continue to do well. Okay, so I think people will really need to wait and watch, because some of the stocks which are play on rural have also moved up 15% in the last couple of days, right? So a lot has gotten priced in also. So I think now, if you look at from a data point perspective, first possibly minimum support price announcement, some point end of June, early July, then the budget. I think people will want to watch out for what happens, okay, because some of this already got priced in very rapidly in the last couple of days.
Fair call. I'm starting off with the topical piece first and then moving on to the other things. One of the things that happened overnight, and therefore oil and gas comes firmly into play, right, Saurabh, is this whole thing around PNGRB doing this. Plus, but beyond that, we're seeing oil prices being very, very contained. Now, to the regulatory piece, secondly, but first, by virtue of the fact that oil prices have come off so much, how does that, if at all, change the picture or the outlook towards different components within this space?
Right. So, firstly, in terms of if you look at the downstream oil marketing companies, and if you look, say, a month back when oil was close to the late 80s or $90, there was this concern that these companies are now losing money on fuel pricing, that's petrol, diesel. And there was a general view that maybe after elections, if there is no major surprise, these guys can come and take a price hike. Now, maybe a petrol diesel price hike at this point of time is unlikely, but it's now not even needed. So in a way, we've, since the OPEC events, etc., oil prices have come off. They're now at a fairly comfortable level in the late 70s, which is quite comfortable from the marketing margin for petrol and diesel. So I think if oil continues to remain in this range, which is Citi's commodities view, our global view, say it's in the mid to late 70s, then that's pretty comfortable for the oil marketing companies. So we retain our constructive stance there. The stocks that we like there are BPCL and HPCL, so we have a buy there. I think the market may still await some bit of political clarity, some sort of clarity on policy on some of these stocks, because ultimately they do fall under the quote-unquote PSU category. And petrol, diesel, fuel pricing, we know, is generally politically sensitive. So maybe the market might adopt a slightly more pragmatic approach towards some of these. But on the gas side, where things are not so politically sensitive, and since you alluded to that, we are a lot more constructive. So we like stocks like GAIL, city gas names like IGL, MGL. So, there is, now that the elections are done, the NDA actually has a majority in the GST Council. So maybe petrol, diesel are a lot more difficult to bring under GST, but gas is clearly possible. We think it can happen. Timelines are always very difficult to judge, obviously. But the whole value chain benefits, the government has this target of increasing gas usage in the economy. And if they do manage to pull this off, then, stocks like GAIL and some of the gas distributors should benefit. There are also some moves around on the regulatory side, which in our view works in favor of some of these stocks. So overall, our constructive view on the gas space remains intact.
So some moves which may come, but based on what you've heard thus far, and if indeed the GST Council moves, you think GAIL is a principal beneficiary, or GAIL plus the city gas distributors kind of on earnings basis, if such a thing would happen, would be equal beneficiary?
Yeah, so in our view, GAIL actually has a direct earnings benefit because there are certain stranded taxes for GAIL because they use gas internally, and those may be stranded taxes. They may be able to, now get the tax credit. Whereas for the gas distributors, it could be a direct earnings benefit, or it could be indirect in terms of, general more gas usage in the economy, which helps their volumes. So our pecking order is GAIL and then the gas distributors like IGL, MGL, but these are our three main buys in the space.
Got it. I'm going to come back to you on Telecom as well, by the way. So that's the other interesting piece. Just, Kunal, the other aspect is banks. For 4 years on a trot, we've been arguing this on television, and no right answer here, but just want to get your view. At least no right answers at our end, so therefore getting your view is important. For 4 years on a trot, PSU banks outperformed the private banks by a distance, YTD too, despite the falls of Tuesday by a country mile. Does that change now? Or because the fear was on Tuesday that maybe PSUs take a back seat and the others come to the fore, and valuations were also reasonably good. Do you sense that to happen naturally as well? Or does a continuation of Modi 3.0 mean that it's not necessary that PSU banks will derate?
So as was highlighted by Surendra with respect to the expectations which have been there on infra and capex, maybe we still expect that it will be on the budgeted lines. There might not be too much of a positive surprise which can come in, and a lot of expectations were getting built into the PSU's growth trajectory, maybe on anticipation of better than anticipated capex. So that I think those expectations are now very much on the expected lines and not maybe on any kind of a positive surprise. And second, in terms of the cyclicality with respect to the benefit of recoveries which flow into the overall ROA trajectory, that was reflected in 4Q as well, and that has supported ROAs upwards of 1% for most of the PSU banks as such. We need to see as to how far can it sustain. The guidance from the management has been maybe it might continue for another 2-3 quarters or so, but maybe thereafter it will be the core earnings which will really play out for them. And then we need to see as to where we are seeing the positive surprises on the ROA trajectory. While on private, when we look at it in terms of the earnings delivery, this time also there was, so there were like two key metrics which were being looked upon. One was with respect to margins and second was with respect to the deposit growth. And in fact, when we look at it, most of them surprised positively. So across the board, margins have settled higher. The exit quarter margins were higher than what the entire street was building in. As well as deposit growth, there was a huge catch-up. Initially, it was thought that it will be more back-ended. But when we look at the fortnightly data, in the first fortnight, it ran down. But again, there was the uptick in the another 2 fortnight. And when we look at it since March, it's hardly down 1%. Right. Okay, so it's not much in terms of the maybe the rundown in the deposits which has happened in 1Q, which builds the case that at least on the deposit growth side, the momentum can still continue. And this will support the overall loan growth as well. No doubt there could be a moderation of couple of percentage points at the industry level. That is what we are also building in. But otherwise, maybe it should be very much in line and no disappointment out there.
So are you net, I mean, are you more constructive private banks than what you would have been, say, 6 months ago or 9 months ago versus PSU banks? I mean, I'm not saying you were constructive PSU banks, maybe one odd, if at all. I'm just trying to understand, does the narrative change now or is it still, is it present continuous?
So we believe like private, we still continue to be constructive, and in fact, for the first time, we started to see the operating efficiency also playing out in one of the banks, which was ICICI, and if we are able to see that over next 2-4 quarters, I think the case can really be made up in terms of like the sustenance of the ROA profile, which we have been highlighting that will be the key to re-rating for the private banks, and I think that visibility is just improving.
Got it. Okay. And just before I come to autos, but just have to dwell on this one point wherein, Surendra, I want you also to come in. Almost, this is the common question being asked for this stock every single time, right? HDFC Bank. It's almost become an ITC meme of 2 years ago that when will HDFC Bank move? When FIs come in? When will FIs come in? Very difficult to say that. So dwell in on this, both of you. I mean, is a lot of private sector banking moves dependent on when foreign flows come in? And if so, when do foreign flows come in?
So I'll just touch upon the fundamental aspects first and then on to the flow side. So when you look at HDFC, again, Q4, their margins against the expectation of a decline, there was an improvement. I think still that kind of a confidence is not there in terms of how much of that can sustain in 1Q. And if we still see both deposits as well as margins holding on in 1Q, that will give much more confidence and improve the visibility on the core ROA profile for HDFC, which I think may drive the flows into the name as well, and maybe on the FI side, Surendra can take that up.
Yeah, so let me comment on the private banks rather than commenting on one stock.
Yeah, not one stock, yeah, of course.
So I think a few things to keep in mind. Firstly, we track AUM of around roughly 400-500 billion on the EM side on a monthly basis to see how their portfolios are moving. And there, after a long time, we are seeing India as an underweight.
As an underweight?
Yeah, so India is now approximately 100 basis points underweight in those EM portfolios, and we use it kind of a proxy for the overall EM space. And this is like after at least a decade. Okay. In that period, they have always been overweight. Of course, India's weightage in the index has obviously gone up in the last 4-5 years. So that's point one. Secondly, I think if you see, we have already seen significant outflows this calendar year. So right now, positioning is relatively light on India from underweight perspective. Secondly, if you look at the market multiple, and we were just looking at it at the start of the day today, we are at 19 times 1 year forward earnings, which is exactly the 5-year average multiple. Okay, so I think people get comfortable that, and obviously people, before an event, people typically always kind of become a little careful, let the event get over and so on. So I think we are getting to a point, and again, also there have been EM outflows. So there are multiple things going on, but overall construct with that underweight position is a lot better, right? If you start seeing EM flows improve and India growth outlook continues to be superior, there is a case to be made for some of that to reverse. So I think those are the factors we are really watching out for. And yes, if those flows come in, it will benefit private sector banks. Having said that, I still think it's not only contingent on private sector banks.
Yeah.
If you see growth improving, right, the fundamentals improving where there have been some question marks in the past few months, you could even see domestics kind of stepping up and adding those stocks. Because on a valuation basis, there are not that many large pockets in the market today where valuations look very reasonable in the historical context. Okay, so private sector banks is one of those very few pockets. So I think you get some conviction on earnings. It becomes attractive for everybody. EM inflows happen. Upside.
Yeah, and also growth, right? Because I know that the other large pocket is IT, which you largely have been underweight on. But we're going to talk about that, and we're going to talk about autos as well. But my producer tells me we need to slip into a break. So, viewers, I know you're waiting for this view on autos. We'll have to slip into a break, come back, and first up, we'll try and talk about what could autos look like over the course of the next 12 to 24 months. Stay tuned, we'll be right back. Back with Talking Point and in conversation with the Citi top team to try and understand how do they think about the next 12 to 24 months on the back of results and events that have happened. Now, Surendra Goyal mentioned that one of the things or two of the things that make a bit of a slightly higher weightage on the portfolios might be FMCG and autos. We all discussed FMCG to death in the last 24 hours or 48 hours. Let me bring in Arvind into the conversation and try and talk about autos. Now, autos I thought didn't need a bit of a leg up because the earnings growth the last 3-4 years has been, I believe, selectively very, very good. Monthly data looks okay. What's your sense about how would you advise your clients to approach auto now over the course of the next 12 to 24 months?
Sure. Quick recap on the earnings. I think most of the companies kind of surprised positively on the earnings. Of course, we get the volumes every month, but even the margins were kind of good. Also, what was encouraging was the commentary from most management was positive after a long time. Earlier it was more of cautious optimism, but now a lot of them were positive, especially in rural. Now, going forward, rural and consumption stocks and companies could benefit from volume growth. Naturally, there's a base effect. So, in passenger vehicles, the base is a little higher. So, your YOY growth might be slightly on the lower end. In two-wheelers, we are yet to reach the peak. So YOY growth would be better optically. If there is a growth in rural areas, then we could see some of the more rural-focused names, entry-level two-wheelers, tractors, of course, passenger vehicles. Those would benefit significantly from a growth in broader consumption. Now, autos kind of straddles between capex-oriented stocks and consumption-oriented stocks. So, if the capex infra also continues, we could see positive trends in the more capex-oriented stocks, commercial vehicle manufacturers, right, and the allied vendors. So, all in all, most companies going forward, the volume outlook looks good. They should benefit from the operating leverage. Over last at least 2 years, 1.5 years, the commodity prices have been a bit benign and all of them benefited. But now, at least in the last conference calls, most management said that it's not a cause of worry, but there is some inching up in specific commodities, which we'll have to see. If there's a good demand, they could take up prices, they could cut on discounts. So probably a good demand could offset those cost pressures. So essentially, we see most of the domestic-oriented auto companies doing well going ahead.
Okay, and I'm just trying to understand what's the top of the pecking order. Is it the rural-focused themes, two-wheelers, tractors, etc., or is it maybe the capex beneficiaries that form the top list?
So, if you see all the rural-focused names, starting with the tractor manufacturer, Mahindra, in the two-wheelers, Hero MotoCorp is the most exposed to rural, and in passenger vehicles, it's Maruti, which is almost 35 to 40% of rural. We are conservative on all the three names. Maruti is our top pick. Going ahead, if you see the broader two-wheeler industry, talking only about the domestic part, could see an uptick. So some of the vendors might also be a good play. You kind of isolate yourself from the market share fluctuations, right, play on the broader industry. So that's how our pecking order is. We are constructive on the commercial vehicle maker, which is Ashok Leyland 2. Specifically to that, even the bus segment demand has been rising quite a bit. And going forward, if there's a bit of pent-up demand among the state transport undertakings, about the orders which have not been placed over, say, past 6 months, and they come through, you could see a growth in the bus demand. And that is a highly profitable segment.
Got it.
So I think from commercial vehicle manufacturers, it's both capex and bus which helps them.
Time permitting, I would love to know about some of the vendors as well, because it's such a large bucket now. But I just have to cover time for 2 more sectors, so I want to just quickly go that. Before I come to IT, a word on telecom, cannot not talk about that. Come in here, it's now firmly a 3-player market in the minds of a lot of people. From an investor's perspective, does it become a 3-option telecom market, or maybe if I include Indus, then 4, or not quite?
Yeah, no, I agree. So, I mean, the successful fundraise of Vodafone Idea clearly, I think, ensures that they can reinvest in the business and, catch up on network investment, something which they were lagging on over the last few years. So it's clearly, pretty much a 3-player market for now. It also appears from, statements made by the government that even they are fairly keen that competition remains, and they're fairly keen that this industry structure stays intact. Yeah. So we are still potentially looking at, tariff repair happening. Maybe, some expectations may or may not be toned down depending on events of this week, but our view is maybe a 15% tariff hike potentially still happens.
Sometime this year?
Sometime this year, yes. So that's one. There are also, this whole AGR case is still pending in the Supreme Court. So that's something which we need to watch if there can be any positive developments there. Still not our base case as yet, but it's something to monitor. Bharti remains our topic in the space, but we are also very positive on Indus Towers. It is a good proxy play on, the industry structure improving and becoming a 3-player market. So these would be our 2 preferred plays. And in Vodafone Idea, I mean, clearly things are a lot better now, but a lot more still needs to fall into place. So we think Vodafone Idea is more like a show me story. So they need to now deliver in terms of the capex execution and then, sort of maintaining or stabilizing their market share. And as I said, the other big things to watch out for will be what happens on the tariff side.
Got it. Well, certainly watching out for that. Bills that we pay also get dependent on that. Surendra, one final thing. We're talking about banks being that large bucket. IT is the other one. If I remember the January note, I haven't seen the last one, but the January note, you were not constructive. The commentary hasn't really changed to my mind. Has it changed in your mind? Are you changing the stance?
Sure. So before that, let me just clarify that the comment that I made on autos and staples was about investors would think about it at the margin. We have not really changed our stance. We are still overweight on autos and neutral on staples in our last published note. So no change in stance, but that's how we are positioned. Now on the IT side, we are still cautious. We haven't changed our stance for around 2.5 years now. So still cautious. See, there are quite a few things in play on the auto side. Firstly, people attribute a lot of the challenges to just the macro uncertainty in the US. We think it's more than that. And we have looked at a few things which kind of suggest that. If you look at the global software companies, there have been disappointments there also, but the year-over-year trends there have improved. Right? If you look at the last 4 or 5 quarters, they have been on an improving trajectory. If you look at the hyperscalers or the cloud companies, even their growth rate bottomed out a couple of quarters back and they started improving. While services, and not only Indian IT, when we look at our global IT services coverage, the growth has been challenged. So we think there are quite a few things at play beyond the macro uncertainty. One is the whole GCC theme, which I think a lot of people have spoken about. The other thing we are starting to see is as clients prioritize the incremental spending towards AI, some of the other areas of investment are seeing some negative impact. And to that extent, unless somebody is heavily exposed to AI, which the IT services industry at this stage is not, you may end up losing a little bit. So I think there are multiple things going on. There are headwinds, and which is why we still remain cautious on IT services.
Well, on one, maybe a bit of a hope for FIs. The second one, if they're listening to Surendra Goyal, they're not putting in money in a hurry for sure. Gentlemen, all of you are out of time, but thank you so much. It was lovely, very insightful. Thanks for taking the time out and giving us your thoughts. As always, as every quarter, really appreciate your time.
Thank you.
Thank you.
And viewers, thanks for tuning in to this wonderful edition of The Talking Point.
Hello and welcome. This is Agam Vakil. You're watching the FNO show, and in this show we take you through all that is happening in the futures and options space in Indian equities. A quick look at how the markets are faring, and they are in fact looking at further covering of shorts at the moment, and in fact we're looking at gains as well. So the Nifty is up as much as 1% at the moment, and well, we continue to see gains there. I reckon that well, we've seen further gains in the Bank Nifty as well, building on the kind of momentum that we saw yesterday. So both these indices advancing, indices advancing with good gains as well. Let's pull up the constituents of the Nifty and take a look at how things are faring. Now, we do have gains returning to something like an SBI as well as an L&T. Reliance Industries also showing a little bit of a turnaround. If you consider something like a Hindustan Unilever and Sun Pharma, that is something which is weighing down on the index to a certain extent. But, if you move on and talk about, a handful of the other factors that are playing in favor or against these markets, I want to pull out perhaps the broader markets. Yes, that's what I want to talk about. So we're once again looking at a resumption of the outperformance of both the mid-cap and the small-cap indices. Mid-cap index up 2.4%. The small-cap index is up around 3.3%. And that's where most of your traction is in today's day of trade. Remember that on the outcome of the election day, that was day before, we saw a sharp knockoff on these indices. A lot of, weakness, should I say, for the broader markets, but it does seem like we're nearly there for a majority of these stocks in terms of the kind of losses that we've seen. A lot of these losses have been covered. Look at the advanced decline ratio on NSE. That is quite incredible. We have over 10 gainers for less than one loser on the NSE. And, well, that just speaks for itself, the way you're looking at in terms of things and the way they're faring. This is the futures, and yesterday we saw an increase in open interest as far as the Nifty, yesterday we saw unwinding in the Nifty futures, and today we are looking at fresh longs building into the Nifty futures. The Bank Nifty futures was where we already had started seeing, for long positions being built in, and today it does seem like it's a quiet day because we're not seeing too much change in OI, but well, more longs all the same. The question really is, where do we go from here, and is 50,000 around the corner once again? Because that's the big mark for the Bank Nifty. For the Nifty, it's going to be 23,000. It's going to be a little bit of an important level because it does seem like, and as analysts suggest, that it's become a little bit of a pivot point at the moment. And, because of the kind of accumulation that we've seen around the 23,000 mark, mind you, 23,000 is not very important, not just important from today's point of view, but, over the many last few weeks, we have seen that accumulation in the 23,000 calls, specifically keeping the outcome of the elections in mind. And based on that, there were a lot of option structures which were deployed. And eventually, at the moment, it does seem like that's the one where the call has a significant amount of OI, even in today's day of trade. Does that get covered? Does that get taken out? At the moment, the Nifty about 150 odd points away from 23,000, and that's the reason why I am stressing on this particular level in today's day of trade. So we'll continue to keep an eye on that one, and we'll continue to give you an update on the same. But for now, the markets are looking good. In fact, the Nifty is edging towards 22,900 at the moment, 25 points short. So you can't really rule that move out, and especially given today is also the weekly options expiry. So, it's a completely ball game there. Well, on that note, let's bring in our experts for today. We have Ajit Mishra of Religare Broking and Nilesh Jain of Centrum Broking, who's joining us on the show. Good morning to both of you, and thanks for joining in. Ajit, I start with you. Things are looking up once again. What's your assessment?
Yeah, good morning, Agam. So definitely, indeed, a positive relief, welcome relief for the participants after a very sharp cut on the election day. And the good part is that we are seeing participation across the board. Earlier, the kind of decline that we were seeing in the broader indices, that was slightly, keeping the participants on the back foot. But now with recovery in the broader indices as well, as you rightly mentioned, so we have recouped most of the losses of the election. So we feel that as long as we are holding about 22,600 mark, which is the short-term average, which we reclaimed yesterday, the tone is likely to remain positive, and we can gradually inch toward 23,000, 23,200, 300 levels in days to come. Similarly, banking is also looking, poised for recovery, but the upper band of this channel in which we are currently trading in exists around 50,400 to 500 marks. So that will continue to act as a strong hurdle. So the risk reward for banking seems slightly skewed towards 1:1 or 1:1.5 ratio. So comparatively, Nifty looks better if somebody is having a positional point of view for the index.
Okay, so that's the view as far as the Nifty is concerned. Well, let's move on and get Nilesh's view here as well. Nilesh, how are you looking at trade on the benchmarks at the moment?
Morning, Agam. So yes, yesterday in the recovery that we saw, there was few positive development that we have seen. The Nifty has surpassed all short-term moving averages, and earlier it took the support of its long-term 200 exponential moving average as well. So now, looking at the positive development for the second consecutive session, I think Nifty is heading towards the psychological mark of 23,000. And the major support that is coming from the India VIX volatility index, which is declining for the second straight session, it is inching towards the comfort zone for the bulls. So any dip below 16 will definitely provide more comfort, and it will help index to pull further on the upside towards 23,200 to 23,300 as well. So yes, from here we are expecting Nifty to hit another record high going forward. I won't be surprised even if we see those levels in the June series itself. But as of now, from a very short-term point of view, the Nifty looks like heading towards 23,100 to 22,200. From today's expiry point of view, the expiry range, it looks like 22,800 to 22,950 could be the expiry range for the Nifty. So yes, structure looks positive. Buy on decline should be the approach. And support for the Nifty is now placed at 22,600 in the spot levels. So that should be the stop loss for the long positions.
Okay. Nilesh, coming back to you on the Bank Nifty, 50,000 back on the cards?
Absolutely. So 50,000 is the level that we are eyeing on immediate basis. Maybe in a day or two, we might see Bank Nifty inching towards, or I wouldn't be surprised if Bank Nifty surpasses 50,000 mark and test the levels of 5,500 as well. So from a 1 to 2 days point of view, the target for the Bank Nifty comes around 50,000 to 50,500. The stop loss for the long should be placed below 49,300. So these are the spot levels we are discussing currently in the spot. Bank Nifty is trading about 49,600. Comparatively, yes, Bank Nifty is giving more comfort looking at the reversal in the banking heavyweight counters like HDFC Bank, Kotak Bank, Axis Bank. I think Bank Nifty should outperform from here.
Ajit, once again to you as well. If you are positive on the Bank Nifty at the moment, what sort of a structure would you deploy in terms of options, or for that matter, would you go along on futures, and what levels would you keep in mind?
So Agam, as we've recommended that since we are closer to the immediate resistance, which is around 49,800 mark, I would rather prefer and wait for any dip intraday to look for any buying position. So closer to around 49,000, 49,200 zone. That would be the area where I would prefer initiating a bull spread with 49,000, 49,800, 50,000 as a call spread. In case if somebody is looking for purely for the intraday, then also you should wait for any dip around 49,400, because 49,800 I feel that for the intraday at least going to be a strong hurdle, and we are just 200 points away from that zone.
Okay. All right, so that's the view, an overall view as far as your benchmarks are concerned. Now let's talk about stocks which are on your radar. But before that, firstly, I want to take up the constituents of the Bank Nifty and take a look at how things are faring there. And then perhaps we can take a look at other stocks which are buzzing. But let's pull up the 12 constituents of the Bank Nifty and see. And well, what we're noticing here is that there are some amount of longs being built in Axis Bank, and that's up around 0.8%. SBI is up 5.3% at the moment. Some longs building in there as well. And the strength of late has also been largely on account of these two larger banks, relatively. There's, of course, we also have Bank of Baroda, which is advancing along with PNB, both of them advancing by around 3.5% to 4.5% at the moment, though not too much to speak for when it comes to their respective futures positions, which largely is very, very quiet there. And of course, a little bit of catch-up trade potentially on the cards for something like a Kotak Mahindra Bank and ICICI Bank, both of which are also advancing in trade. HDFC Bank, the heaviest of them all in terms of weight, also up around 0.5%. Now let's take a look at all the other stocks which are actually seeing an increase in OI. Again, early days in June expiry, but now is the time where you actually start seeing a lot more traction towards the positive. And of course, Metropolis is there, right there on the top of your list. ABFRL, along with IEX. IEX has also come up with some monthly updates on a fundamental level, which is why we're seeing that advance. Exide, along with Amara Raja Batteries, in fact, is continuing to see that advance through and through as well. And Muthoot Finance also looking at longs building in. What about stocks which are seeing unwinding in positions? So I reckon that to a certain extent we're seeing short covering in BHEL, but that stock is up around 13.5% now. So I'd reckon that's not just short covering. It potentially could be seeing some longs there as well. Canfin Homes, Petronet LNG, Cummins India, LIC Housing Finance, all of them are looking at good amount of strength going in. And so that's what we have in terms of some of those stocks in the futures, which is buzzing. With that, let's take a look at what our experts have to recommend in today's day of trade. Ajit, stocks on your radar today?
So I've got both stocks on the long side. So first on the defensive pack, in fact, we have seen the entire pack, be it pharma, FMCG and IT doing exceptionally well. And we expect that there could be a bit of a breather in between, but the tone is likely to remain positive. And today also we are seeing that Biocon has been maintaining its positive tone and it's been gradually inching higher. It's a catch-up move that we are seeing in the Biocon because other pharma major, they have done their part. So now we are seeing gradually also Biocon inching towards its previous swing highs. So we are eyeing 330 levels in Biocon in the near future. 306 should be your stop and you can go long in Biocon at current levels. Another stock that we like from the IT space is HCL Tech. The stock has finally reclaimed its long-term moving averages after consolidating for nearly 2-3 weeks below the same. And we are seeing good traction in the volume front as well. So we expect this recovery to strengthen further. And 1398 is something that we are eyeing for the intraday with the 1356 as a stop.
All right. And let's also go across to Nilesh for his picks for the day. Nilesh.
Right, so I have two buy recommendation. First of all, Chola Finance from financial space. So NBFC are looking positive. So within this space, Chola Finance specifically, this counter has given a good breakout from its consolidation. And even if you look at the derivative data, we have witnessed 2.5% fresh OI addition in this particular counter. So in spite of the weakness that we saw in last few trading sessions, in fact, this counter have outperformed. And from here, the target on the upside is coming around 1370. Stop loss should be placed below 1290. And another stock that is again a heavyweight, that is L&T, that is also looking positive on the chart. And after 2 days of sharp sell-off in this particular counter, there could be possibility of a short covering. Today as well, we are witnessing, in fact, we are witnessing a build-up on the long side in this particular counter with the addition of 4.5% OI. So I think it is heading towards 3600 mark on immediate basis. So 3620 should be the immediate target. 3470 should be the stop loss. And another sector that we just mentioned about banking space. So within banking space, one stock that has just came on my radar, that is Kotak Mahindra Bank. So watch out for this particular counter as well. We expect a move towards 1780 to 1800 on immediate basis. So 1700 should be the stop loss for the long. So Kotak Bank could be the third preferred bet within banking space.
Okay, well, on that note, taking a moment to thank both our experts for joining us and taking us through their views on the markets and also giving us a handful of trading ideas. But we move on and talk about, well, the latest from the political scenario at the moment. A day after Chandrababu Naidu spearheaded the landslide win, he dismissed rumors of a possible switch to the India bloc and affirmed that he is still a part of the NDA alliance. Now the party will likely demand for a special status for Andhra Pradesh. And my colleague Uma Sudhir from NDTV joins us with more. Uma, well, thanks so much for joining in. What can you tell us about the latest here?
Chandrababu Naidu, very pragmatic and very experienced in dealing with coalition politics as well. Andhra Pradesh and Chandrababu Naidu have been, should I say, in the margins of the political debate so far, and getting center stage is something that he would love. And yes, that is a space where he can now strike a hard bargain, and that's precisely what he is going to do. From the outset, ever since the results were declared on the 4th of June, Chandrababu Naidu was very clear that he is very much an ally of the NDA and stays right there. He does know that the India alliance really does not have the numbers either, and the experience of the last 5 years and the experience of the last few months when he had to encounter 53 days in jail as well have taught Chandrababu Naidu important lessons. And now what we know is that Chandrababu Naidu is back in Vijayawada. Of course, he's going to be talking to his MPs and his senior party leaders as well. But what happened in Delhi yesterday was very significant. What we understand from our sources is that Chandrababu Naidu and the Telugu Desam would like the Speaker's chair. That's something that gives them negotiation room and a link, should I say, aligned to every ministry possible, and to the fact that Andhra Pradesh has delivered a huge mandate for Chandrababu Naidu, and there are expectations are huge considering the numbers that have to come up at the center as well. They know there is that room for maneuver, and they can't get someone better than Chandrababu Naidu to be able to do that hard bargain. So if in that visual yesterday we saw Narendra Modi seated next to him was Chandrababu Naidu and then Nitish Kumar, it was like the ranking order, the first ranker, the second ranker and the third ranker. But if the first ranker has to be the monitor, the second ranker and the third ranker are going to demand their pound of flesh. And yes, along with the Speaker's post, they are going to ask at least for 3 ministries, is very clear. Chandrababu Naidu has a capital to build 10 years after state formation, no capital at all, and that's something that people in Andhra Pradesh feel quite ashamed and embarrassed about actually, and therefore Chandrababu Naidu delivering Amaravati is very important for him. Polavaram project, getting money for that, national project status. Then again you have the special category status that's always on the table, legally not possible, but if he delivers it, his brand equity in Andhra Pradesh would go up, and that could also make succession there much more easier for his son as well. Absolutely. And then Naidu can think of even moving to national politics, because remember, politics quite dynamic, and therefore the movement of Chandrababu Naidu, his eyes would certainly be focused on Delhi.
Absolutely, absolutely. Well, Uma, thank you so much for getting us that roundup of the latest as far as the TDP is concerned. But we also have another exclusive coming in, and this is from Bihar. Bihar Chief Minister Nitish Kumar wants 3 ministries and a special status for Bihar as well. My colleague from NDTV, Prabhakar Kumar, now gives us an update from there. Prabhakar, good morning.
Yeah, morning. And knowing Nitish Kumar, he understands his mathematics well. Seeing the numbers playing at Delhi, Nitish Kumar now realizes the power of 12, the 12 MPs which JDU has. And Nitish Kumar is an old school politician, is a hard bargainer, is a tough nut to crack, and he would not let this opportunity slip out of his hand. Nitish Kumar, as we know, is pressing for common minimum program in the new government. So there was never a common minimum program as such. The 10 years Modi government we saw was implementing BJP's agenda. Now here is a situation where Nitish Kumar, who has 12 MPs, who has a big say will have a big say in the government, is demanding for a common minimum program, a model which was followed during the Bajpayee's regime when Bajpayee was the Prime Minister. Nitish Kumar would also like to have a committee actually to ensure the implementation of that common minimum program, and also there should be a post of convener. The JDU leader, the senior JDU leaders are saying that Nitish Kumar, going by his seniority, by his experience, the way he has functioned as a minister in the coalition government during Bajpayee's era, Nitish Kumar is the most suited guy for the post of the convener. And remember, in this coalition government of this particular nature, the convener of the coordination committee becomes very, very important. Now, as far as the ministries are concerned, JDU is pressing for 3 ministries. The 2, of course, the cabinet rank ministries, and 1 would be the MOS, the Minister of State. What ministries JDU will get? the railways is one thing which they are certainly eyeing for. They want the railway ministries because traditionally all the leaders from Bihar, whether it is Lalu Prasad Yadav, Nitish Kumar or Ramvilas Paswan, they have always been getting the railway ministries. And also he would also like to focus on the core ministries. The core ministries as in agriculture, as in rural development, because Bihar basically is an agrarian state. So he would like to focus there so that he could actually make a difference here at his home terrain in Bihar.
Right. Well, Prabhakar, thank you so much for those updates from Bihar as well. Again, some of these aspects are very crucial with respect to the government. Again, we're going to continue to give you updates on this one. But from there on, and we shift focus back to Indian markets and the commodity market for that. And we have Anuj Gupta. He's the head of commodity and currency at HDFC Securities, who's joining us on the show right now. Anuj, good morning. Thank you so much for joining in. Well, let's delve into the first pick right at the top of your list. We have gold. What's your assessment here and what's your call?
Good morning. Yesterday we saw a lower level recovery in gold prices on the back of weakness in dollar. Today we have seen again a negative trend in dollar index, and we are expecting that gold may trade on a positive note. International market is trading around $2370 per ounce, and on an MCX it's trading around 70 to 900 kind of level. So the trend little bit on a positive note on the back of weakness in dollar, and expecting again a weakness may be seen in the dollar index. So we are recommending buy in gold prices somewhere around 70 to 550, somewhere around 70 to 500. That kind of level trader can go for the long in gold with the stop loss of 70 to 380, and we are expecting it may test 70,000 to 73,100. So in the international market, we are expecting gold may test $2380, $2390 per ounce level in intraday.
All right, Anuj, let's move on and talk about crude as well. This is where we have seen a little bit more action. What's your call here?
However, demand concern still is in the crude oil, and we have seen yesterday it test the lower levels around 70 to 73 dollar per barrel. But yes, on technical charts, it is on oversold zone, and we are expecting some bounce back from here because OPEC members are decided to cut production in last OPEC meeting. So that will little bit put some support, give some support to the crude oil prices. So we are recommending buy on crude oil on a dips. So one can buy around 61.75 odd levels with the stop loss of 61.05, and we are targeting it may test 60 to 80, and on dollar terms it may test $75-$77 kind of level. So due to short covering, we're recommending buy in crude oil prices for intraday.
All right, there you have it. That's the view coming in on a handful of most buzzing commodities. Well, we'll take a moment to thank Anuj for joining us and taking us through his views on the commodity space. And on that note, we have completely out of time. We slip into a short break, and on the other side, we get you the small and mid-cap show. Stay tuned in. We'll be back in just a bit.
Hello and welcome. You're watching the Small and Midcap show. I am Mahima Vajrajani and with me is Harsh Sayata. Well, before we move on to the managements that we're going to speak to today, that is NLC India, and the other one is not a management, but we're going to speak to the analyst of systematics, Mr. Dhananjay Sinha. Let's take a quick check firstly on how the markets are panning out to be. Well, the markets are in green, up and above in green actually. If we see the Nifty 50, well, Nifty is up around 1.18% right now, trading in a range of around 230 points. If we take a look at Sensex, Sensex is trading in a range of around 700 odd points, up around 1.14%. Both Nifty and Sensex are nearing days high right now. In terms of Midcap 150, if we can pull up the, yeah, there you go. So today the broader markets are doing better than the benchmarks. It's up 2.6%. Small cap is up 3.5%. Quickly, if we can pull up the Nifty contributors and see what is contributing towards the gain today. There you go, SBI, L&T, RIL, NTPC. Something that's weighing down the Nifty is Hindalco and the others. Well, the interesting part today is to see the advanced decline ratio, to see what the breadth of the market is doing. It's very interesting because there are 1793 stocks which are advancing and there are only around 150 stocks which are in the decline. So almost 12 times the gap. But, you know, Harsh, PSU banks have made a comeback. What say?
Well, yes, absolutely stealing the show in trade today. And let's pull up the sectoral indices as well, try and break those down. Let's have the sectors. PSU Bank, obviously one of the leaders in terms of sectors, but PSE index also doing very, very well. So we've seen a bit of a comeback there. Realty doing well as well. You're seeing the Nifty Bank also hold up, well above the 1% mark. If we can pull up the Nifty Bank in terms of the graph, of course, FMCG and pharma, some of the defensive names not doing too well. But there you go. Even within the Nifty Bank, you're seeing more concentration with regard to how the PSU pack is doing. And that's essentially the theme of the day. Because we've seen a bit of tepidness on where PSUs are concerned. Let's pull up some of the power financiers as well. REC, PFC doing extremely well. I think 8% plus the last I checked. But if we can pull those up, there you go. Almost 8% there on PFC and 8.5% on REC as well. So some of the PSUs doing extremely well in trade today. But let's shift focus. Prasanna Kumar Motupalli is with us. He's the CMD at NLC India. Well, Q4 results slightly tepid. If we can pull up the graph for NLC, try and see what it's done over the last month or so, and we'll see that there has been an impact of those numbers. There you go, and hopefully we'll get some understanding of what's happening here. Mr. Motupalli, talk to us. How has Q4 gone for you? There's been, of course, a higher base of Q4 FY23 impacting that top line number in terms of percentage. But talk to us about what's happened in margins, actually.
Okay, in the quarter 4 of the last financial year, our operational performance was excellent. Whatever losses we had in the first 3 quarters because of some land acquisition issues, they could be compensated and we could generate electricity maximum. And the lignite and coal production was also maximum in the quarter 4. Because of which, in the last financial year, we could produce lignite plus coal all-time highest quantity. And all our power generation stations, 17 stations were in operation to meet the requirement of the grid. So the quarter 4 compared to other 3 quarters, it was very good performance, resulting in very good performance in the financial year.
Understood. But Mr. Prasanna, I'm trying to understand that the margins have significantly gone down. So why has that happened? Reasons for the same, and going forward, do you expect them to improve?
Yes, madam. Last financial year, as you know, madam, in the first 3 quarters, there was problems in the lignite production because of some land acquisition issues. Because of that, on continuous basis, we were losing the generation capacity. But last year, we could complete the major land acquisition activities, and substantial portion of the land is in our possession. And also the long pending issue of diversion of river, Paramnar river was also completed. So that facilitate us uninterrupted mining operations for next 25 years. With all these things, we are doing well compared to the previous financial year in the current financial year. And going forward, this will further improve, and our lignite and coal production as well as the power generation will be further improved.
Understood. So, sir, are you suggesting that margins will again breach 25%, go above 25% Q1 itself?
We cannot exactly say the 25%, but there will be certainly an improvement over the last financial year and the last quarter.
Mr. Prasanna, I also want to understand as to, what has the under recovery number been like in FY24, because, your power generation revenues have been impacted because of that. So one, what is the under recovery number been like in FY24, and going forward, how is it set to be, improved in FY25?
Our under recovery in the last financial was around 600 to 650 crores. That was mainly attributed to the shortfall in lignite production because of the land reasons, and also the technical problems in TPS2 expansion. And both the issues we addressed in the land acquisition front, we already acquired major portion of the land. So that under recovery will not be there in the next financial year. And already in the quarter 1, that under recovery is not there. And similarly, the other part also, the technical problem in TPS2 expansion, the modification activity we are taking for the 1 unit in the next month, and the 2nd unit in the second half of this financial year. With these things, finally, we are targeting to reduce the under recovery to minimum possible in the current financial year itself, and from next financial year onwards, it will be zero.
Understood. And sir, what's the guidance like for FY25 in terms of top line and margins?
Good. Top line and margins will be substantially better than the previous financial year, because the major issues that resulted in reduced revenue and PAT are addressed. So in the next financial year, the performance is much better than the previous financial year.
Understood. So, sir, I also want to understand that, you have 2 projects which are set to be completed in FY25. So what kind of revenue potential and margin potential are you expecting from these 2 projects?
Madam, we are targeting completion of our Ghatampur thermal power project, which is almost 2 gigawatt project. The first unit we are about to declare the commercial operation from next month, and subsequently the balance 2 units also we are targeting for the commercial operation in the current financial year. So with the start of operation from all these 3 units, the PAT will be increased by around 500 crores. And because it is 1 unit will be from next month, and others will be in the subsequent part of the financial year. So from next year onwards, once all 3 units are in operation, around 600 to 700 crores contribution will be there in the PAT. This is regarding the Ghatampur thermal power project. We are also expecting capacity addition of around 300 megawatt at Barsing, sir, in the solar capacity. There we are expecting increase in the profit of around 150 crores in the PAT.
Understood. So cumulatively put together, you're expecting almost a 900 crore PAT increase only from these 2 projects. Is that correct?
Exactly.
Understood. And that is by FY26.
Yes.
And this is in addition to the growth that you're likely to clock on your current capacities as well.
Exactly.
Understood. So a substantial PAT increase expected. Okay, what's the new investments that you're looking at beyond FY26? What's the new growth drivers?
As on date, we are having 1.4 gigawatt capacity of renewable capacity. We are having 2 gigawatt renewable capacity projects in pipeline. 2 gigawatt in solar and around 50 megawatt of wind. in the state of Gujarat and Rajasthan is already in pipeline. We are expecting the completion of these projects by the financial year 26. And subsequently, beyond 26, we already entered an MOU with the Rajasthan government for capacity addition of 1000 megawatt of solar and 125 megawatt of lignite-based power generation. That also will be coming after 26. And we are also having an MOU with the government of Assam for addition of 1000 megawatt solar capacity. That also will be coming after 26. So also, we are envisaging 2 into 660 megawatt, 1320 megawatt lignite-based power station at Neyveli. Already it is tenderized. So that capacity will also be coming in the financial year 29. In addition to that, our Talabira thermal power project, which the work has already started, 3 into 800 megawatt, that will be coming for financial year 29. And the second stage of Talabira thermal power project, we are going to tenderize, and that is we are expecting by the next month. So that also will be coming after 26.
So then, sir, I want to understand that all of these projects that you've mentioned, what is the kind of revenue contribution you're expecting from all of these projects, going forward beyond FY26, and how quickly do you think that you'll get to a break even for these projects?
From the existing 6 gigawatt capacity, we are targeting more than 17 gigawatt capacity by 2030. And also in the mining front also, from the existing around 44 million metric ton, we are targeting more than 100 million metric ton by 2030. For all these activities, capex of around 1 lakh crore we are planning to invest. And as on date, we are having regulated equity of around 9,000 crores. And by 2030, this will become almost 24,000 crores, where a return of around 15% is assured. So we are expecting a substantial improvement in the PBT and PAT going forward.
Understood. And sir, one last quick question. So if you're expecting your capacity to go from 6 to 17, that's almost triple of your capacity. Do you expect this to be fully utilized by 2030? And secondly, what are the capacity utilizations right now, and FY25, how are you expecting them to be?
See, madam, as on date, the power requirement is growing like anything. If you take the CAGR of last 10 years, it is 6 to 7%. But last 2-3 years, the growth is more than 9%. And that growth is expected to continue in future also. So, taking all these factors into consideration, the capacity utilization factor of our thermal power stations is going to be maintained at more than 75% level. And we don't expect any backing down from these the thermal power stations, because there is a huge power demand going forward.
Understood. Well, sir, that's been a very insightful segment, I must say. You've given us a lot of takeaways from this interview. Thank you so much for taking our time and speaking with us at NDTV Profit. Well, it's time to slip into a short break. On the other side, Midcaps continue its momentum in the coalition era. To answer this question, we will be joined by Systematics Group's Dhananjay Sinha. Stay tuned. back. You're watching the Small and Mid Cap show. Well, we are joined by now Mr. Dhananjay Sinha, who's the co-head of Equity Head Research Strategy and Economics, a systematic group. Welcome to the show, sir. My first question to you is, my first question to you is that, you know, with NDA in power, but not as per what the exit polls were indicating, you know, going forward, what is the kind of strategy that investors should adopt in terms of the small and mid cap segment? Should they go defensive, or what should be the strategy?
So I think it is important to understand how the strategy of the government might actually the policy perspective of the government can actually be influenced post the election. So I think our broad thesis is that with the BJP having about 240 seats in the overall coalition government, and this is going to be a revival of a coalition government. So which means that the nature of the policies will actually undergo a change, because there will be push and pulls across states, across regional parties, and across and across sectors. So I think what we are sort of characterizing the last 10 years is that the government had actually adopted a fairly supply-heavy policy where they invested a lot in infrastructure, on roads and railways. They tried to give corporate tax cuts, etc., that benefited profit growth for companies, etc. Plus, they also sort of recapitalized banks, so PSU banks did very well. So I think that was the thesis over the last 10 years. I would say that what went missing is the fact that a lot of these consumer goods companies have seen a significant slackening in the volume growth and demand situation. And I think the broader issue from the mandate is also that they need to address the livelihood issues relating to income generation, employment, etc. So I think in terms of the policy slant, we think that there is a possibility that the government might actually switch towards a more I would say, household-related or broader economy-related policies, which might actually generate a better demand scenario than just focusing on the supply side. So I guess what would happen is that since the tax revenues are also will be a matter of concern, because they will need to share more revenues with states, it's quite likely that the allocation that they have been doing on infrastructure may actually slow. In the interim budget, we have already seen that allocation for investments in roads and railways is actually slowed to 4 to 5%. So there is a possibility that they might actually slacken there. I would say defense is something that is holding on relatively better. So defense sector stocks have actually done well. But my sense is that you might actually see more allocation towards rural side. Rural revival is very important. So unless you have a demand revival, you can't have private capex sustaining, because you can't just depend on government capex on infrastructure to sustain for a very long time. So I think that is a switch that can happen. In terms of the overall. So I think the other side, of course, is that the retail flow has actually been pretty good. It's been ranging from 20 to 25,000 if you look at the 1,000 crores, if you look at the mutual fund flows, and plus there are other flows that are happening. So I think people will find opportunities as the policy change, as the profit and demand cycle change going forward.
Understood, sir. So in this context, if you can quickly tell us what are the major changes or switches you've made to the portfolio, given the fact that the BJP has not come with a full majority. So what are the changes or switches, key ones?
Yeah. So I think what we think is that, this whole mass consumption or a broader consumption theme will actually come to flavor once again. And we think that some of the staple companies and I would say the retail companies might actually see better traction. I think we're already seeing some of that happening for instance, for D-Mart, for instance, it's been, it was struggling in terms of revival, but I think there is a good amount of improvement that has happened in the last quarter. I think this can actually continue going forward. We have also listed V-Mart, which is more like a rural and semi-urban kind of play, or second tier, third tier city kind of play. So V-Mart is also something that we have considered within the discretionary thing. And D-Mart, we are seeing that there is a certain amount of proportion of value-added products actually getting traction now. I think it should be applicable to V-Mart as well. And we think that in the rural space, as that revival happens within the FMCG space, it's been a underperforming sector, but Dabur and Marico are two stocks that we have been looking at. So one of that is large cap. We think that the IT sector, which has been out of flavor, might actually come back, because over the last 6 months or so, there is a sort of underperformance that's been there. So I would say that within the mid-cap space, we have Sonata Software and Coforge that we have sort of highlighted. Otherwise, I would say that the auto sector has been doing fairly well. I would say especially the two-wheeler space and tractors and agriculture equipments. So we within the large cap, we have something like an M&M within our portfolio. We can look at agriculture equipment such as Escorts and Hero Motors. These are large caps though. And I would say agri input is another space that we will look for. Dhanuka Agritech is a stock that we have been looking at as in the agri-chemical space, and of course the fertilizer companies such as Champal and Coromandel.
Very interesting. So if I can, sorry, I'm interrupting, but what have you switched out of? So you've given us a whole host of inclusions, but what have you switched out of?
So I think in terms of positioning, we have been positioning like this earlier as well. So we were expecting a kind of a election outcome as it has come. So we are not surprised with the election outcome. So there is no great switch in the portfolio, I would say.
At this point, you would still hold on?
Yeah, I think these are the sectors that we are. So basically, incrementally, I would look at value in the IT space, which has actually been under stress. So there is a possibility that rupee corrects and stuff with more fiscal deficit concerns that would come. So 10-year G-Sec yields have gone up. So there is a possibility of rupee depreciating. Some of the IT companies might actually do better from here on. And I think that there I might actually increase a little bit of weight. I would say in the PSU, the other thing from a portfolio standpoint is also that, with a concern on tax flows, it's possible that this whole I would say exuberance in the PSU space might actually start getting challenged going forward, because the government would actually want to dip into the resources and balance sheet of the PSU companies. So I would say in the next 2-3 months, as the budget comes in and then we see the details of it, some of the PSU, this whole exuberance might actually start to wane. And I would say also that if the G-Sec yield goes up, it might also have an impact on the banking sector, because the cost of fund would actually rise. So I think there is a certain amount of exuberance there as well in the PSU banking space. So those are some things that we are mindful of. We think that that within the market also there can be a rotation towards more value-oriented stocks and stocks that can actually grow and fundamentally can actually grow in terms of the cycle that can evolve in the consumption space.
Understood. So, Mr. Sinha, then I want to understand that, going forward, where do you see the value? Like, do you see it in the large caps, or do you still see that the small and mid caps will be taking over the large caps?
So I think value can be identified all across the place, but my sense is that if we are looking at value stock, I think some of the large cap companies have underperformed. If you look at something like things such as HDFC Bank, and let's say look at Kotak Bank, they have not done anything in the last 3-4 years, and at the value level, it is lowest in last 14-15 years. So you can find value there. We also see good traction even in mid cap. I would say something like Balrampur Chini, it's kind of a underperforming stock, but we think that there is good amount of fundamental traction that is there. I would say within the cycle, within the small mid-cap space, in the NBFC, affordable housing is something that can actually do well if the government tries to generate employment in the affordable housing space. I would say that some mid-cap companies can also get some traction. So I think we have highlighted India Shelter and Awas Housing, for instance. But I think value and cycle is something that we will look at. I think largely, I would say a lot of these large cap and big components of the market has not really performed. So I think these are in the large cap space that can actually can do better in a situation where there is a sector rotation that would happen.
Excellent. Thank you so much for this conversation, Mr. Sinha. It's been insightful, and you've given us lots to chew on, and a great perspective given the elections and the outcome. Thank you so much for this chat. With that, completely out of time on the small and mid cap show, at least for today. Stay tuned to NDTV Profit. But for now, from myself, Mahima, everyone who puts this show together, thanks so much for watching. Stay tuned. More on the other side.
Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. And it's an interesting day because we've seen over the course of yesterday and today a significant retracement or rebound from the low point on Tuesday. We'll get to that in just a bit. But if you've got questions on specific stocks, either short-term or long-term, I'd invite you to send them to us on any one of our social media platforms, or in fact on the number that you can see on your screen. That's a WhatsApp number that I have access to. Now, let's take a look at where the markets are right now. And in fact, like I was saying, quite a bit of ground has been recovered over the course of yesterday and today. We briefly crossed that 22,900 mark in trade today. And frankly, the possibility of 23,000 is not off the cards. It's something that could happen over the course of the remainder of the session. The mid-cap and the small-cap index are doing particularly well. That is, the broader markets are in good spirits, one would say. You have the mid-cap 150 index that's trading with gains of close to about 2.6% based on what I see on my screen, and 3.5% gains for the small-cap index as well. Understandably, therefore, the advanced decline ratio, the market breadth, is favored towards the advances. There are much more advances in trade today, very, very few declines to speak of. Let's very quickly take you through the heat map for the Nifty 50 just to give you a sense of the patchwork that is the 50 stocks that represent the Nifty 50. And you will see that there are more gainers than losers right now, 1.1% right now. But the likes of the large names, and I'm talking about so SBI, which is up about 4.4%, and several other public sector utilities, the likes of ONGC, the likes of Coal India, BPCL, Power Grid, all within the top gainers of the Nifty 50. There you go. The screen is pointing to gains, significant gains for NTPC, Power Grid, Larsen & Toubro, another heavyweight, up as much as 3% or thereabouts. Reliance Industries adding about 1% or so. The losers are some of the big gainers earlier in the week. So you have HUL, you have Hero MotoCorp, Nestle, which remember were the themes that were doing well when the market was not. So those are losing a little bit of ground at the start today. But let's focus on one particular stock, and that is Uno Minda, because this stock is arguably the stock of the day. There is a development that we will talk about in just a bit, but look at that chart. It's up as much as 18% in trade today, and we've got Puneet joining in to tell you about why the development that came in overnight is so significant. Puneet, what can you tell us?
Yeah, thanks for that. So it is a significant development because of the company's history with these technical tie-ups. Let's deep dive into what this is. So they have partnered with Innovance Automotive, which is a Chinese company, and to strengthen the electric four-wheeler product portfolio. When you look into specifics of which segment they are going to go, they are looking to manufacture and sell high voltage EV products, which are currently some are imported in India, and very less players from the local auto component makers have some presence in this particular segment. Now this is both for passenger vehicles as well as commercial vehicles, and certain products that include in this particular technical tie-up would be the charging control unit, or the CCU as we call it, the EV inverters, electric vehicle motors as well, and finally, which is the main product, which is a 3-in-1 electric drive system axle, which is a key product for the commercial vehicle industry for the electric trucks going forward as well. Now through this tie-up, they are aiming to further strengthen partnership and transition into a potential joint venture as well as any kind of products which the JV partner might have in the future as well. Now for Innovance, the company had revenues of roughly $4.2 billion in financial year 2023, so a really strong product profile as well as revenue profile for the company. Kotak Institutional Equities came out with a report this morning. They have retained the buy, although it's much lower than the target price, coming at roughly 930 rupees per share. They have said that this is a key partnership with the company has formed, and also the company that they have formed with Innovance Automotive is one of the largest e-powertrain suppliers in China. They have any kind of uptick in EV adoption will be key for the company to go forward. And one other thing that they mentioned is that the potential kit value which these guys offer to the car makers could be anywhere between 1.5 lakh to 2.5 lakh, which is really strong compared to the current portfolio that Uno Minda has. Finally, why is this so important, as you rightly asked, is because of the company's history in technical tie-ups. Do note in Q4 also they had come up with a technical tie-up with a particular company, and that has the company said in this conference call that it has really strong product profile and good acceptance from customers as well. And traditionally they have done multiple such tie-ups in the past as well. So overall, really strong tie-up in the product and passenger vehicle space where the customer wasn't present before.
Right. Thanks so much for getting us those details, Puneet, and certainly important development. Let's get our experts on board. We've got Akshay Bhagwat, who's Senior Vice